alitoleka Nyerere baba. Tanzania yetu ndio nchi ya kusifiwa, kote ulimwenguni watu wote watambua. Tanzania yetu ndio nchi ya furaha. Nae Baba Nyerere ndiye wetu muhifadhi, naye ndiye aliyeleta na uhuru. Tanzania yetu ndio nchi ya furaha.
Asante sana. Honorable guests of honor, before we sit, allow us to have a grace to sing our national anthem, Tanzania national anthem, before we commence the business of the day. Naomba tutulie kwa ajili ya wimbo wa taifa. You may be seated. Honorable guest of honor, Mr. Emmanuel Tutuba, the government of the Bank of Tanzania, Her Excellency Francisca Belebo, UAE Commissioner for Economic Development, Ms. Nandine Sukmar, the CEO of the World Federation of Exchanges, Pierre Celestine Rwabukumba, President of Africa Securities Exchange Association, CPA Nicodemus Mkama, the CEO of the Capital Markets and Securities Authority, Mr. Peter Nalitolela, our host, the CEO of Dar es Salaam Stock Exchange, CEOs and representatives of the African Stock Exchange, distinguished speakers and moderators and panelists of this 2 days conference, our esteemed sponsors and development partners who have made possible for this event to be successful, the capital market stakeholders, members of the floor, including the ministers, leaders who are here, especially from the Ministry of Finance and other related sectors, ladies and gentlemen, including the guests from different countries invited, welcome to the 13th edition of Building Africa Financial Market, BAFM 2026, with the theme of driving capital markets growth in Africa through innovation, inclusive integrity, and inclusive participation. And I think it would be very fair that we give ourselves the biggest round of applause for this conference to happen. Naomba tujipige makofi mengi. Honorable guests of honor, we have extensive invited guests, and probably that first protocol might not accommodate every one of us, but it should be enough to say, welcome to Tanzania. It's my great pleasure now to invite on the podium to give us the welcoming remarks, Mr. Peter Nalitolela, who is the CEO for the Dar es Salaam Stock Exchange, for the welcoming remarks. Karibu sana, Mr. Peter. Makofi mengi tafadhali.
Honorable guest of honor, the Governor of the Bank of Tanzania, Mr. Emmanuel, distinguished guests, members of the press, ladies and gentlemen, kindly allow me to stand on the existing protocols as been established by Good morning. First of all, I'd like to thank God the Almighty for blessing us with the health and good fortune to be here this morning. For me personally, it's such a great privilege and honor to be in your presence, and I do look forward to hearing from different speakers and presenters, and catch up with old friends, and to also make new friends. We have 160 registered guests representing about 30 different nationalities with us over the next 2 days, and this covers 16 African exchanges, brokers, regulators, technology partners, banks, development financial institutions, and the World Federation of Exchanges. On this note, I want to thank the WFE CEO, Ms. Nandini Sukumar, for being able to make it here yourself. I know as WFE CEO, with so many members and with so many events happening every other day, you don't always get to be able to travel to every event that is being held. So for us to have you here, I appreciate that, Nandini. For those following us online, it's unfortunate that you could not be here physically, but you do understand that other responsibilities and commitments held you from being able to be here with us. But we do hope and pray that you enjoy the sessions from wherever you are. I do wish to convey special thanks to our guest of honor, Governor Tutuba. Today being the first day of the government financial year, and with the MPC scheduled for tomorrow and the release scheduled for Friday, I'm sure that there's a lot on your calendar. You have, however, taken your time to join us today and grace us with your presence as the guest of honor. Thank you, Governor. Dear distinguished guests, the Building Africa Financial Markets, or BAFM, seminar is a premier annual capacity building event hosted by African Securities Exchange Association, ASEA, in partnership with various regional host exchanges. It brings together regulators, policymakers, stockbrokers, and investors to collaborate on strengthening, developing, and integrating Africa's financial and capital markets. This year, the Dar es Salaam Stock Exchange is humbled to be hosting the 13th edition of BAFM here at the beautiful Hyatt Regency Dar es Salaam, aka the Kilimanjaro Hotel. When the conversation about the possibility of this year's BAFM came up, I immediately jumped on the opportunity, and I told Agnes Nafula, the head of our ASEA Secretariat, that I would be happy to do it. As you all know, DSC is turning 30 years this year, and we had been planning to have the grand celebration of our 30th anniversary. So when the idea came up, I thought, why not host BAFM and combine the two events? That is, host BAFM on the first and second day, that is July 1st and 2nd, and celebrate 30 years of DSC on the first day. The plan, therefore, is for us to be here from today to Friday with day 1 and day 2 of the BAFM seminar being tomorrow. And on Friday, we're going to have the 30th anniversary of Dar es Salaam celebrated also here. The theme of this year's BAFM is Africa Rising from Financial Markets. This theme basically refers to the continent's economic transformation being powered by domestic capital, resilient banking systems, and robust stock exchanges. It means moving away from reliance on foreign and external loans, and instead using local exchanges to fund mega infrastructure, agribusiness, and entrepreneurship projects. Some of the thematic discussion points will include unlocking growth capital, basically connecting savings with expanding business growth through exchanges, allowing citizens to build wealth by investing in growing African companies. Financial inclusion and resilience, which basically touches on expanding access to digital banking and microfinance so that small businesses and everyday individuals are part of the economy and can be linked through their banking systems to the capital markets ecosystem. Innovative financing by using tools like green bonds, social bonds, infrastructure bonds, sukuk financing, embedded finance to fund critical projects without saddling nations without sustainable foreign debt. Over the next 2 days, we're going to listen to experts give the African perspective, the global perspective, technological innovations and digital transformation, regional and continental linkages initiatives, innovative funding solutions, and so much more. For us as hosts, and by this I don't just mean the DSC, but Tanzania in general, hosting this seminar comes at the perfect time because today is the first day of our 25-year Tanzania Development Vision 2050 journey. I believe and hope that the takeaways from the next 2 days will add to our list of tools and levers that us as Tanzanians can pull towards fulfilling our ambition to become a $1 trillion economy by the year. The vision particularly positions capital markets as the primary vehicle to mobilize long-term domestic and international capital. It identifies the role of capital markets in various ways, including bridging the financing gap that traditional financing has failed to cover, support project financing and public-private partnerships through various funding solutions from capital markets, offering diversified financial instruments, and growth of the private sector and SMEs. Honorable guest of honor, mine was a simple task of providing the opening and welcoming. Therefore, let me end here, lest I preempt what the keynote address is going to deliver and what other following speakers are going to convey to us. I do once again want to thank each and every one of you for making the time to be here. And I want to give special thanks to the organizing committee from ASEA and DSC, led by the committee chairman, Mr. Emmanuel Nyalali, the Chief Business Development Officer of the DSC. Where's Nyalali? And the committee vice chair, Ms. Sarah Mrema, Chief Marketing Officer of the DSC. So Chief Market Operations Officer of the DSC. Where's Sarah? Still busy, I think. We'll not be here without the kind support of our sponsors, led by our partner sponsors, Kado Securities and CRDB Bank PLC. I also want to thank our gold sponsors, Infotech Group, Stanbic Bank Tanzania Limited, Orbit Securities, UTT Asset Management and Investor Services, UTT AMIS, NBC Bank Tanzania, NMB Bank PLC, and to our silver sponsors, Solomon Stock Brokers, Zan Securities, iTrust Finance, Victoria Finance, Global Alpha Capital, National Social Security Fund, NSSF, STT Technologies, and IFC. To our guests coming from outside Dar es Salaam, please do take time to enjoy our beautiful city. We are located right in the heart of the Central Business District, with the venue overlooking the beautiful and lovely Dar es Salaam Harbour. At night, for those of you staying here, do find some time to make your way to the rooftop and look at the beautiful lights of the Dar es Salaam Harbour. And for those of you who will be staying with us after Friday, on Saturday we'll have an excursion and we'll go to one of the best national parks, Mikumi National Park in Morogoro. We will take our standard gauge railway train, one of our landmark projects that we've embarked on as a country recently and still going, the construction is still going. We'll take the train to Morogoro town, and then after that take buses to Mikumi National Park and come back in the evening. Once again, ladies and gentlemen, I want to thank each and everyone for you being here. Please do enjoy the next 2 days, and I want you, the next 3 days rather, and I want all of us to pay attention and to participate in the seminar. Thank you.
Thank you very much, Mr. Peter Nalitolela, the CEO of Dar es Salaam Stock Exchange, and I think he deserves another big round of applause. On regarding of hosting this event, but again, celebrating 30 years of excellency for Dar es Salaam Stock Exchange. Makofi mengi tafadhali. Honorable guest of honor, after those remarks, it's a time now we hear from Africa Securities Exchange Association to get the perspective, the African perspective, before we get the global perspective. Allow me now to welcome Mr. Pierre Celestin Rwabakumba, who is the president of the association. Karibu. Makofi mengi tafadhali.
Our guest of honor, Honorable Governor Tutuba, our host, the Dar es Salaam Securities Exchange, colleagues, allow me to stand on all protocols. Fellow exchange leaders, partners, investors, ladies and gentlemen, good morning. It's both a privilege and a personal pleasure to attend the 13th Africa Capital Market Forum, hosted in this beautiful city of Dar es Salaam, as we celebrate the 30 years of the Dar es Salaam Stock Exchange. When I speak about markets, I like to speak about people, because every exchange represented in this room tells an inspiring and unique story. Behind every listed company is an entrepreneur who dared to dream. And behind every investment is a family saving for a child's education, a retirement, or a better future. Behind every trade is confidence in tomorrow. As Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. But I would like to add, in Africa, our capital markets are also a bridge, connecting ideas to capital, ambition to opportunity, and our continent's extraordinary potential to the world. I'm glad we are seeing the world in front of us. The lady in pink, she's the CEO of the World Federation of Exchanges, and she's here with us to grace our occasion. This year's theme, driving capital market growth in Africa through innovation, integration, and inclusive participation, could not be timelier. Today, Africa is not simply a continent of potential, it has become a continent of innovation. Across our nations, young entrepreneurs are building fintech companies, digital banks, renewable energy businesses, healthcare startups, and manufacturing companies that solve African problems with African solutions. Yet one question remains: how do we finance Africa's future? The answer won't come from governments alone or from development finance institutions. The answer will come from strong, trusted, and integrated African capital markets. As the late Kofi Annan reminded us, knowledge is power, information is liberating. Education is the premise of progress. In the same spirit, transparent and efficient capital markets empower citizens. They democratize wealth creation, encourage innovation, and drive businesses access the long-term capital. Today, Africa's capital markets have made tremendous progress. Many of our exchanges have modernized trading systems, strengthened regulations, embraced digital technologies, introduced new products, and expanded investor participation. But we must also recognize that although we have made tangible progress, our work has only begun. Our markets remain fragmented. Cross-border investment is still too limited. Too many African businesses struggle to access capital, and millions of our citizens have yet to become investors. This is why integration is no longer an option. It's a necessity. When our markets work together, liquidity grows. When investors move capital more easily across borders, businesses grow. When we harmonize standards and share expertise, everyone benefits. There is an African proverb that says, if you want to go fast, go alone. If you want to go far, go together. That wisdom perfectly captures ASEA's mission. Our goal is not merely to connect exchanges and markets. It is to connect opportunities, to connect entrepreneurs with investors, and connect savings with productive investments, and ultimately to connect Africa's future with global capital. Innovation will be equally important. Artificial intelligence, digital platforms, blockchain technology, tokenization, fintech, mobile investing, and digital identity are fundamentally changing financial markets around the world. Africa has an opportunity not simply to catch up, but to lead in areas where mobile technology and digital finance have already transformed millions of lives. As Peter Drucker wisely observed, the best way to predict the future is to create it. That is exactly what African exchanges must do together. Our responsibility extends beyond financial returns. Capital markets must finance infrastructure that connects our countries. Exchanges must support and medium-sized enterprises that create jobs. Exchanges must accelerate climate resilience through sustainable finance, and exchanges must ensure that women, young people, and first-time investors are not only speculators, but participants in Africa's economic transformation. Ladies and gentlemen, today we are also here to celebrate an institution that has become a symbol of progress. For 30 years, the Dar es Salaam Stock Exchange has demonstrated the resilience, professionalism, and vision. To the leadership, the staff, listed companies, regulators, investors, and the people of Tanzania, congratulations on this remarkable milestone. May the next 30 years be even more transformative than the first. Finally, let me leave you with the words of Nelson Mandela. It always seems impossible until it's done. Building integrated markets once seemed impossible. Creating world-class exchanges in many of our countries once seemed impossible. Financing Africa's transformation through African capital markets may seem ambitious today, but together it is entirely achievable. Yes, we can do it. Let us leave this forum not only inspired by the committed to action. Let us build innovative markets that are trusted and inclusive. Most importantly, markets that finance the Africa of our children, the Africa we deserve. Thank you for your partnership, for your leadership, and thank you for believing in Africa. I wish you all a productive forum and an enjoyable stay in Tanzania. Asanteni sana, murakoze cyane.
Murakoze indeed. Makofi mengi tena tafadhali. Thank you very much. Before we invite the global perspective to be heard, I would love to make this announcement clear so that we have a peace of mind. Due to Data Protection Act that has been passed recently in Tanzania, we wish to know if there is a person in the room who does not are there or feel or consent for his picture to be taken or the video to be aired, because we are live right now and some of the pictures will be posted on our social media, probably on our website and various sources. So please, if you're one of those who do not consent your picture to be used, raise your hand right now so that our photographers can know exactly which area not to focus on. Tafadhali naomba unyoshe mkono. All right. So we are all consenting to participate fully, physically and digitally. Naomba tujipigie makofi. A big round of applause, ladies and gentlemen. Honorable guest of honor, it's a prime time now. We're here on the global perspective, and it's my pleasure to welcome once again, for the first time on the podium, Ms. Nandini Sukmar. Karibu.
Good morning. It's a pleasure to be here, and I want to start by congratulating Peter and his team for really pulling this together in a very extraordinary way, demonstrating the excellence that we first encountered at the WFE with them in 2018, the last time I was in Dar es Salaam, we came to do the inspection. And 8 years on, what a pleasure to be here again with the exchange, continuing to build on that chapter. It's a privilege to speak to you today. I was told to offer the global perspective, so we thought long and hard about what to talk about. And I thought perhaps to introduce it, I would say just a couple of things. Market infrastructure, our exchanges, our clearinghouses, settlement systems, the post-trade networks, no longer just the plumbing of finance. We have become a strategic infrastructure. Market infrastructure, the exchanges determine how capital flows, we shape investor confidence, and increasingly, we define which economies attract investment and which get left behind. So the role of exchanges, the role of ASEA members, the role of WFE members has never been more strategic or imperative than it is today. And then, if you will allow me, I want to talk to you briefly about the perhaps five global trends. There are many more, but the five that today are shaping the next couple of years for exchanges and clearinghouses. The first, technology. It has been a long time now that technology has been the oil on which the exchange, the market infrastructure engine runs. Globally, exchanges are moving from traditional trading venues to fully integrated and very diverse digital ecosystems. And that's a trend playing out in every market, large or small. And a lot of innovation is occurring around which assets or which particular pillars the exchange is building to service their market globally. So the conversation is no longer about whether digital transformation will happen, but rather it's about speed, scale, resilience, and trust. AI, which is the current hottest topic, digitalization, cloud infrastructure, new technologies, and tokenization are indeed changing how markets will operate. Settlement cycles are shortening where appropriate, and I think that's very much an interesting theme for the African continent. But crucially, with technology, it is a strategic priority now for market infrastructures. We have to be strategic about how to deploy which technology and how to use it for transformation as well, as much as it being as we are financial institutions. So for us, at the start of the year, we identified tokenization, crypto assets, and market design as among our 5 or 6 critical priorities for 26. And for Africa, this is a major opportunity. On many levels, you all are not coming from legacy infrastructure, you all are still building. And what a remarkable opportunity it is. I have 10 minutes, so I'm going to move right along, but I wanted to say that last year at our annual Exchange Innovation Awards, the winner was NGX Invest from the Nigerian Stock Exchange, a digital platform that focuses on financial inclusion. And we had many nominations. We have 75 members, 250 institutions. The runner-up was Deutsche Börse AG, Europe's largest exchange, to give you a sense. But the winner was NGX Invest, and all the members voted on who that winner would be in terms, and it won as a digital platform, focused on inclusion. On tokenization, which is not a topic here in Africa yet, but is an imperative topic across the rest of the world, many of our members are looking at how to harness this to bring that innovation onto the market. And as we think about that globally as an industry, it is important to understand, if that is not yet a topic for you, when it does become a topic, from a regulatory perspective in particular, any action around tokenization, especially with a new and unregulated platform, must affirm the principle of technology neutrality, ensure regulatory parity, promote supervisory coordination, clarify legal frameworks, and prevent marketing of derivatives, as stock instruments. Second, market resilience or operational resilience continues to be a strategic priority around the world. And we are living in a time where geopolitical shock has become, unfortunately, almost normal. So from every sense, COVID thankfully is behind us, but it was a period of intense stress for the financial system, and the market infrastructure was robust, it was strong, and that was not a coincidence. It was because resilience, operational resilience, is something we all must invest in, be strategic about, and think about on a daily basis. The third, there is a shift, a global shift from public to private markets, and it's accelerating. And that should be of concern to every one of us in this room. If you look at it, there's a structural slump in IPOs. There's been a 22% fall globally in the last 5 years. And if you look at African SME markets, which are characterized by low capital raising activity, only 10.85 million in capital was raised, representing 0.15% of the global capital raised in SME markets. But this is an opportunity in Africa. Whenever I come to the continent where we have 15 members, many of whom I see in this room, dynamic members, Africa is a continent of energy, of aspiration, of optimism, and this is an opportunity. There are many companies here. Our traditional role remains. We had a look, actually, at the WFE around the environment that is required for IPOs to be raised, and we've created a listing stringency index which we can benchmark to your market. and that evaluates how regulatory policies affect or are correlated to the number of IPOs occurring in your market. IPOs, liquidity, these are directly correlated to regulatory incentives. So I want to thank the regulator, the chair of the Tanzanian market, who's here with us today, who is a very progressive, growth-oriented, development-minded regulator. Thank you, Chairman. Without regulators like you, the market is not able to thrive. Finally, domestic capital mobilization is becoming Africa's biggest opportunity. Speaking to Peter earlier today, we talked a little bit, and to Celestin, we talked a little bit about how the market, domestic participation has grown, and in a time of increased geopolitical uncertainty, the fact that many of African markets have been able to build domestic institutional participation has protected them a little bit, because the market remains focused on the core business. Finally, and I'm happy to stop here, regional integration will define Africa's capital market future. I congratulate all of you at the ASEA on the ALP and what it means. Fragmentation remains one of Africa's biggest structural constraints. We look forward, all of us here, to hearing more about the ALP and how it will drive competitiveness, liquidity, and greater allure for African capital markets. So I would say the part of the reason we came today, 30 years of the DSE, what a wonderful celebration of the impact an exchange can have on a capital market, but also because it is Africa's moment now. Every time I come to the continent, I'm struck by the energy, the aspiration, the change, the pace of change, and the ambition. And those are all things that I'm sure you will hold on to. You will be one day, you are emerging already as a bloc and will continue to do so. Grasp that future. We never come at the WFE and think, with Africa, here is where they are relative to the rest of the world. With Africa, the story is always the opportunity. And I am sure all of you in this room are very well poised to grab that opportunity. Take it now. Congratulations.
Thank you so much, Ms. Shukmar, and I think she deserves a second round of applause. Before we proceed, guest of honor, I would love to recognize the presence of Dr. Fadi Kanso, who is a Secretary General for Arab Federation of Exchange. He is with us. A big round of applause for that. Honorable guest of honor, it has been touched that without regulation, the investment, the capital market itself can drain into hostile. And it's my prime time to invite our regulator of the of the Tanzanian market, CPA Mukama, who will then officially have a leisure of inviting you for your speech. CPA Mukama, karibu sana. Makofi mengi sana. Big round of applause.
Our guest of honor, Mr. Emmanuel Tutuba, the Governor of the Bank of Tanzania, Mr. Daniel Ole Somayan, Chairman of the Board of Directors of the Dar es Salaam Stock Exchange, Mr. Peter Nalitolela, Chief Executive Officer of the Dar es Salaam Stock Exchange, Mr. Sebastian Piero Rwabukunga, President of the East Africa Securities Exchange Association, Madam Nandine Sukma, from the World Federation of Exchanges, Chief Executive Officers and representatives from the African Securities Exchanges, and I'm quite happy to take note that we have 16 exchanges represented here, so we are all really very honored and grateful. Chief Executive Officers of market intermediaries licensed by the Capital Market and Securities Authority, Tanzania, our development partners who are present here, distinguished delegates from African continents and beyond, ladies and gentlemen, good morning, everybody. I don't see the energy and passion. Today is a significant milestone for the development of financial markets, not only in Tanzania, but for the African continent. So we really need to see the energy and passion. Can we really stand up? Let's stand up so that we see the energy and passion. And we'll have to say two things which will make you remember Tanzania. So each one of us will have to ask your neighbor, habari ya asubuhi, and then your neighbor say, nzuri sana. And then the second word, you have to, karibu Tanzania. And then you say, asante sana. Yeah, now I can see the energy and passion. Thank you so much. First and foremost, I would like to thank our Almighty God for the grace of health that has enabled us to participate in this remarkable occasion, the 13th Building African Financial Market Forum for 2026. The forum marks an important milestone in the continued development of the financial markets in our country and across the African continent. I would also like to express my appreciation to the African Stock Exchanges Association and the Dar es Salaam Stock Exchange in particular for the noble decision of hosting the forum in Tanzania. Congratulations so much. But also allow me to thank the World Federation of Exchanges and our development partners, sponsors, and other stakeholders whose support and commitment have made this forum possible. Thank you so much. Asanteni sana. The theme of this year's forum, driving capital market growth in Africa through innovation, integration, and inclusive participation, is timely and relevant to the developmental aspiration of our continent. Across Africa, governments are pursuing ambitious development agenda that demand substantial and sustainable long-term financing. Strategic investment in infrastructure, energy, industrialization, affordable housing, digital transformation, climate resilience, and other priority sectors are essential for achieving inclusive and sustainable economic growth. To meet such investments requires deep, efficient, and resilient capital markets. Our collective responsibility, therefore, is to strengthen our capital market by fostering innovations, enhancing regional integration, and promoting broader and more inclusive participation. By doing so, we are building financial markets that are not only catalysts for investment and economic growth, but also powerful enablers of Africans' sustainable development and shared prosperity. Honorable guests of honor, as I reflect on the journey that the Tanzanian capital market have gone through, I'm delighted to note that Tanzania has made significant milestone in strengthening the capital market, and these milestones are part of the broader continental journey. Please allow me to highlight some of the notable milestones in the Tanzanian capital markets, which is reflective of the trajectory of the financial markets in Africa. Honorable guest of honor, the capital market in Tanzania is sound and resilient despite global economic uncertainties and geopolitical tension. Thank you so much for this achievement, our guest of honor, for not only being the governor, but also the chairman of Tanzania Financial Stability Forum. Thank you so much for your noble leadership. Honorable guest of honor, the total value of investment in capital market in Tanzania has demonstrated a momentum of growth of 146.8%, reaching 72.24 trillion as at 31st May, from 29.27 trillion in May 2021. This resilience reflects sound regulation, improved market infrastructure, and growing investor confidence. Tanzania's capital markets have also recorded remarkable progress in terms of innovation and product development endeavors, positioning the country among the leading markets in advancing sustainable and thematic finance in sub-Saharan Africa. Some of the notable achievements include issuance of the first green bond that was done by CRDB, a themed CRDB Kijani bond, which raised 171.8 billion compared to a target of 40 billion, and it had a success rate of 430%. But also we had the first multi-currency social bond, Jamii bond, done by NMB, that had a success rate of 284%, and Also, issuance of first subnational water infrastructure green revenue bond by Tanga Wasa that had a success rate of 103%, but also the first infrastructure bond that had a success rate of 215%, but also quite a number of sukuk bonds that has been issued in the market. In total, we have 18 sukuks that has been issued in the market, clocking to 718 billion, and we are quite happy that last week we had another sukuk that was listed on the stock exchange, and it had a success rate of 208%. So, Honorable Governor, you could clearly see how the market has been progressive in terms of diversity of products, but also attracting both domestic as well as international investors. So we are quite grateful and we are quite happy with the enabling environment that are being progressed by the government through the noble leadership of our President, Her Excellency Dr. Samia Suluhu Hassan. So we thank you so much for working together in putting enabling policies, regulatory environment, as well as good operational environment. We have also witnessed strong growth in the collective investment scheme segment, which have become a key driver of financial inclusion and market deepening. The CIS sector has expanded significantly, recording an impressive growth of 1,074.2% in assets under management, clocking at 6.1 trillion as at 31st May, from 519 as at 31st May 2021. Honorable Governor, the schemes invest in diversified portfolio comprising treasury bonds, listed corporate bonds, listed equities, Sharia compliance instruments, and money market products, thereby enhancing market liquidity, stability, and the vibrance that we are witnessing in our market. But also, this growth has been further strengthened by the introduction of innovative products, including the first exchange-traded fund in Tanzania, which was issued by Vertex International Securities, which tracks the performance of a diversified portfolio of actively traded equities listed on the Dar es Salaam Stock Exchange. And in addition, the market recorded a historic breakthrough of the issuance and listing of the first ever regional East African Exchange Traded Fund, the iTrust East African Large Cap ETF. Honorable Governor, I think this is a true demonstration of the regional integration of our capital market, because the investments are being done across markets in East Africa. Honorable guest of honor, technology also continues to transform market access and participation through digital platforms such as Simu Invest, hisa kiganjani, M-Wekeza, mobile-based investments application have increased access to capital markets. I was quite happy when we had conversation with Madam Anne, when she pointed out it's not only regulating the markets, but also you need to develop. I think this is really very important. And from that perspective, we have been supporting market development endeavors by strengthening the legal and regulatory framework, and the key reforms include issuances of capital market and securities, corporate and subnational sustainability bonds regulations, but also we have issued investment-based crowdfunding guidelines, but also we have done some amendments to the provision of the Dar es Salaam Stock Exchange trading rules that has enhanced market liquidity, transparency, and operational transparency. And this aligns with international best practices, and the amended rules have substantially enhanced liquidity and broadened participation in the capital markets. So we are really quite happy for that. Honorable guest of honor, as regulators, market operators, and industry stakeholders, our responsibility does not end with innovation. It extends to ensuring strong governance, transparency, investor education, and continuous compliance. I'm confident that the deliberations of this forum will continue to inspire innovations, financial solutions that respond to evolving investor needs across Africa. CMSA, on our part, will continue to provide a conducive regulatory environment that prioritizes innovations, financial inclusion, and sustainable capital market development. As we do this, we'll be contributing to broader economic growth and transformation in Tanzania and across Africa. Thank you so much for your attention. God bless Africa. May I take now this opportunity, Honorable Guest of Honor, to invite you to deliver your speech. Asante sana.
Thank you very much, my brother Kama, the regulator of from CMSA. I would like you to recognize the presence of everyone of you here, distinguished delegates from Africa and beyond, including sponsors whom I've seen some of the flyers moving on the screen to recognize them and their contribution, members of media, ladies and gentlemen. I would like you to stand on the protocol that has already been established. A very good morning to you all. Yeah, let me start by thanking the Almighty God for the gift of life and good health, and for enabling all of us to travel safely from different places and convene here today. It is my singular honor and pleasure to welcome you to Dar es Salaam, especially those who have traveled from different countries. Specifically for this 13th edition of the African Security Exchanges Association Building African Financial Market Forum 2026. On behalf of the government of the United Republic of Tanzania, I extend a warm welcome to you all, our dear delegates from across Africa and beyond. Your presence reflects our shared commitment to strengthen Africa's financial markets and building a more prosperous and resilient continent. Allow me also to commend the Dar es Salaam Stock Exchange, who are currently now commemorating their 30th anniversary since we were established. Congratulations so much. I was telling my brother Peter that in Tanzania, especially for men, 30 years is a grown-up age of marriage. It's a year that, or age that you can demonstrate your strength and commitment to your family. But now, as you are celebrating 30 years, have no doubt that you are matured enough and you have actually done a lot, where most of Tanzanians have invested through the Dar es Salaam Stock Exchange. There are those who have now become billionaires and multi-millionaires due to your support. So thank you very much, and you have really made it. Ladies and gentlemen, allow me also to commend African Security Exchange Association and all institutions that have worked tirelessly to organize this important forum. You have done a great job, and I believe that your efforts will be rewarded on earth and even in the heaven. Ladies and gentlemen, it's a fortunate day for myself, since you invited me as a guest of honor to officially officiate this forum, because today is a special day where Tanzania, we are now commencing implementation of our new Vision 2050, and today is a new the first day for the new financial year of the government. Now we are here to celebrate 30 years anniversary of the DSE. At the same time, having this 13th edition of Building African Financial Market Forum. And have been also privileged to work with other institutions, including the Revenue Authority, Tanzania Revenue Authority, who will also celebrate today 30 years of anniversary. So it's a coincidence, but I think it's a fortune day where we have a lot of issues to learn and continue to demonstrate to our good country for the prosperity of our nations. Ladies and gentlemen, this year's theme, driving capital market growth in Africa through innovation, integration, and inclusive participation, is really timely. And today, the global economy continues to experience profound transformation. However, there are a lot of issues, including the geopolitical tension, climate-related risks, technological disruptions, and evolving financial conditions, which are reshaping international capital flows and the investment decisions. These developments remind us that Africa's alone, we still have a long-term way to go, and Africa's long-term prosperity will increasingly depend on our ability to mobilize domestic savings, deepen our financial markets, and allocate capital efficiency to productive investments. I hope my colleague Mkama has spoken a lot about all these, and you can see that here in Tanzania, together with other African nations, we still have a lot of issues to rethink and find out how we can mobilize more resources and put together to support our own developments, either by individuals, by corporates, or by a nation. We all agreed that we have made significant strides as far as sound macroeconomic management, but we are yet to attain the economic potentials that our continent has. For Tanzania, we have been doing quite well despite the global headwinds. In 2025, for example, our GDP grew by 5.9%, and the projection for 2026 is to continue growing at 6.3% of our GDP, while inflation in 2025 was at the average of 3.3% and has remained within the medium-term target of 3 to 5%. The banking sector in Tanzania has remained resilient, well capitalized, and liquid, with good quality of assets, whose non-performing loans remained at 2.9% in March 2026. And the private sector credit has continued to expand, growing at an average of 24% in the year ending June 2026. With respect to capital market development, the Dar es Salaam Stock Exchange has evolved into a modern multi-asset exchange with approximately Tanzanian shillings 68 trillion, which is about 26 billion USD in listed assets, including Tanzanian shillings 35 trillion in equity market capitalization, and more than 32 Tanzanian shillings trillion in government securities. The market has expanded to include corporate bonds, sustainable bonds, infrastructure bonds, sukuk bonds, and exchange traded funds. As you have listened from the sentiment made by my brother Kama, that there are a lot of issues that you have made so far. I remember even for Islamic products, just 2 years when we amended our Bank of Tanzania Act to expand the scope and include all those Islamic products. Currently, there are a lot of sukuk bonds that have now listed in the stock market. I do hope that if you can structure some of the products and they come up with appropriate products from the market, still we can support our market and improve some of our corporates to mobilize more resources, because there are people who are still keeping their funds in their pillowcases, under their mattresses, and other places within their good houses. So our team from the Bank of Tanzania, since I chair the National Financial Inclusion Forum and the National Financial Stability Forum as well, I have dedicated my team who are now moving across the country to educate our brothers and sisters who are seated in different locations, including remote areas, just to get knowledge on financial inclusion. And I hope last time you joined the hands to these initiatives. Now, the outcome of our financial literacy program, including those programs which are currently being undertaken through media and other digital platforms, has brought a lot of funds in the market. I remember last week when we issued one of the government bonds was for 25 years maturity period. We wanted to collect about 260 billion Tanzanian shillings, but was oversubscribed to around 1.5 trillion. You can see that there are a lot of people who still have money in their good homes. However, some of them have continued to keep their funds, their money in the banking system. So market activities has also accelerated significantly. Equity turnover has increased from Tanzanian shillings 229 billion in 2024 to approximately Tanzanian shillings 1 trillion in June 2026, mainly driven by digital innovations. Now, as alluded by my sister here, who have seen digital platforms has also remained among the key enabler to ensure these transactions. Likewise, the central depository investor base grew from about 600,000 investors in 2024 to more than 890,000 investors in June 2026. These achievements demonstrate the important contribution of sound policy, innovation, and investors' confidence in strengthening Tanzania's financial ecosystem. Ladies and gentlemen, despite the significant strides we have made, with the statistics I have just mentioned from Tanzania's perspective, we still have a lot of issues to do in our beloved continent of Africa. We all know that Africa is home to roughly 1.58 billion people, nearly 20% of global population of 8.3 billion people as of this year. However, as of June 2026, the nominal GDP of Africa is projected at USD 3.560 trillion, only 3% of nominal GDP of the global world of 126.3 trillion USD. At the same time, the number of listed companies in Africa's stock exchanges stood at around 1,140, and the total market capitalization stood at about USD 560 billion, compared to approximately 50,000 listed companies worldwide, with a global equity market capitalization of approximately USD 137 trillion. So you can see, despite that we have a huge population, still we haven't been able to have a big share in the world market capitalization. Now, this is one of our tasks that we should continue to rethink and look on those opportunities which are surrounding our institutions or our companies, our good countries, and they come up with the appropriate innovations that can increase the level of investments through our capital markets. The above numbers prompted the following questions in my mind always, which I also want to share with you so that we can continue deliberating and find appropriate solutions. Have been rethinking on three fundamental questions. One have been rethinking that what are the long-hanging fruits as long as listing of companies and the market capitalization in Africa stock exchanges is concerned. Usually have been rethinking on those lines. The second question have continued to rethink. What are the main barriers and what incentives can we provide to encourage more listing of companies and the market capitalization? The third question that I've always been asking myself, what can we do to encourage innovation that will enable more listing of companies and the market capitalization while addressing the challenges associated with the new technologies? I remember my sister also, Nandi, has touched on it, where we are now rethinking on these good innovations or technologies. And the last time we invited, or we established the Bank of Tanzania sandbox regulatory framework, where we received about 63 new innovators. And just last month, I approved the 3 products or 3 innovations or companies now who have qualified or graduated to enter the market. But still, there are a lot of issues to do from these new technologies or emerging technologies. So I think I will be one of the happiest person in the world if we change the narratives in 5 to 10 years. And I believe that with the potential that African has, we can change the narratives if we determine to do so. We take bold steps and we join our hands together to make it possible. I always believe that everything is possible, and I believe that even this one is also possible. Ladies and gentlemen, as we deliberate, I want all of us to remember that African capital market can achieve its full potential in isolation. Greater regional integration, harmonized regulations, interoperable infrastructure, and cross-border investments will enable all of us to mobilize large pool of capital and support the ambition of the African Continental Free Trade Area. Equally important, we must remember that innovation must continue to drive our future. Artificial intelligence, digital finance, and modern market infrastructures are transforming global financial markets. Our responsibility is to embrace these opportunities while safeguarding market integrity, investor protection, and financial stability. Here in Tanzania, we have had these new emerging technologies, including cryptocurrencies, bitcoins, and the stable coins, and the similar in a virtual assets. Because I also chair the National Steering Committee, we are about now to enact the new law and the regulations which will support or regulate all these virtual assets. So as we take advantage of emerging technologies, still there are some risks which are associated to those virtual assets. But as a regulator, we have an obligation to ensure that we protect our consumers while supporting those innovations to the extent that we'll be having any contribution to our development economies. Ladies and gentlemen, let me conclude by reminding you that Africa possesses abundant resources, a youth population, expanding enterprises, and growing domestic savings. Our challenge is not the absence of opportunity, but also ensuring that Africa capital finances continue to develop. Let this forum renew our commitment to building deeper, more innovative, more integrated, and more inclusive capital market capable of transforming our continent. Together, we can transform our continent. I wish you fruitful deliberations as you proceed with this forum for 2 days, and I hope all of you will also be available on the third day when DSC will be commemorating their 3rd anniversary. I also invite you to enjoy the hospitality of Tanzania. Not only here in Dar es Salaam, we have a lot of issues to offer. You know, Tanzania, we are among the blessed country where we have about 26 national parks. And I hope some of you, if you'll be having enough time, you can move just to Mount Kilimanjaro. And when you climb it, when you reach to the peak, you can have an opportunity to see the entire continent from the top. And we'll be having a good privilege to visit different tourist attraction sites of Tanzania for those who will get enough time. With these remarks, it is my honor to declare the 13th edition of the African Security Exchange Association Building African Financial Markets Forum 2060 officially open. Thank you very much for your kind attention, and God bless you all. Asanteni sana.
Ladies and gentlemen, before we sit, I think it would be a privilege to give a standing ovation for that remarks, tafadhali. You may be seated. Honorable guest of honor, we are grateful for your remarks, but also for your valuable time and also your sentiments that you have just shared with us. Now we have one simple protocol to observe, and that is to give the shelf life of this event by taking group photos. And I will leave to the Secretariat to rearrange the stage for us to do the pictures. And meanwhile, while they are doing so, I would love to acknowledge all the sponsors who have made this event possible. But I would love to start with our platinum sponsors, Kado Securities Limited. Please, a big round of applause. For those who do not clap, the sponsor is watching and probably he will not offer you lunch. Also, we would love to acknowledge another platinum sponsor, and this is CRDB Bank, one of the leading banks in Tanzania. We would love also to recognize our sponsors, gold category. We have Infotech Group, Makofi, Stanbic Bank Tanzania, Orbit Securities, UTT Amis, NBC Bank, NMB Bank PLC. And I think NMB will feel a little bit jealous because now CRDB is a platinum sponsor. We have also silver category. We have Solomon Stockbrokers, Zan Securities Limited, iTrust Financing Limited, Victoria Finance PLC, Global Alpha Capital Limited, National Social Security Fund, STT Technologies, and the International Finance Corporation, IFC. Can we collectively give them the biggest round of applause for that? Now, on the same token, regarding the group photo, can I have one usher, please? This has to be aligned. We have a regulator here. The line is going this way. Regulator sija kakasirika tafadhali. Ushers, can we have one, please? Help. Now, you might have noticed we have the blocks on at the back, and some of you might ask, why are they not removing? It's a logistical issue. They are tapped on the floor. So please don't scrutinize your mind and say there's a glitch. We in the financial market, we are always on the risk analysis all the time. So please, especially kama kuna watu wa OSHA hapa, naomba mtusamee kwa hilo. So on the same token, I would love to call forth the high table to take our seats with the guest of honor in the middle. Karibu tafadhali. Additionally, we request also the MD for CSDR to join us tafadhali. That will be our first picture. The second picture will be board members from Dar es Salaam Stock Exchange and CSDR, please. Karibuni, board members, pamoja na wenyekiti wa board. Asante sana. The next picture will be stock exchange CEOs present, plus WFE member who is also present. Karibuni sana. All the CEOs of the stock exchange across Africa. Mozambique. Probably you are speaking Portuguese. I couldn't get your attention. Karibu. Thank you very much. The next picture is with the regulator, Capital Markets and Securities Authority, MSA. Karibu tafadhali. manipulators, naomba msmile kidogo. Siwatishe watu jamani. And on the same talk, kabla mjaondoka, ningeomba Dr. Fad, please, can we join him? Asanteni sana, thank you. Honorable guest of honor, we also have stockbrokers who are here, and SEBA leadership is also here. Please, if we can quickly do the grace of coming kwenye stage. The chairman of SEBA is here, and the vice president as well. We might wish to do 2 phases, so that can we take 2 gentlemen down so that you can appear on the photo. Tusogea hapa kwanza ili tuwapishe wengine ili na sisi tutapata fursa yetu. Yes. Maana kuna wengine inabidi watoe uthibitisho kwamba walikuwepo. Sasa we don't need to zoom the picture to know that you were there. Asanteni sana. Second group tafadhali. Asante sana. The next picture is ASEA Secretariat present. The Secretariat of ASEA, karibu. On the same token, before you drop, please, can I call forth Tanzanian Secretariat from DSE Secretariat? All right. Kiongozwa na mwenyekiti Mr. Nyalali. A big round of applause, please, for the ladies and gentlemen, for our Secretariat. They have missed sleep for a couple of weeks, but they are still shining this morning. Wapigeni makofi mengi sana tafadhali. Smile, smile. I know you're tired, but just smile. Makofi mengi tafadhali. Last but not least, guest of honor, allow me to welcome the sponsors, and let's begin with the platinum sponsors, Sarah DB and Kado. Karibuni. Wawakilishi. The next picture will be for gold sponsors. And please don't confuse the list. If you're on the silver, you can wait. Can a gentleman close the picture, please? Gentlemen should adjust for protection purposes. Yes. Asanteni sana. Silver sponsors, please. Karibuni. Asante. Last but not least, DSE and CSDR staff members present. Karibuni sana tafadhali. Na naomba hawa pia tuwapigie makofi mengi sana. Asanteni sana. Mheshimiwa, kwa sababu ya communication breakdown, mwakilishi wa CEO wa Egypt Stock Exchange nafikiri hatukuelewana, kwa naomba tumpe fursa naye afanye apate picha. Mpigeni makofi jamani. Alisahau kidogo wakati wanaitwa wenzake. Shukran. Mheshimiwa mgeni rasmi, now that marks the end of our first phase of the opening ceremony, and we really appreciate your time once again. It's a prime time now to have a tea break. The members of the media might want to talk to you, but that will be subjected to their leisure. Also, at the entrance, there are exhibitors. You might pay a courtesy of just visiting them. Karibu sana. Mr. Peter, naomba tuongoze sasa msafara kutoka hapa. Can we raise on our feet, please, ladies and gentlemen? A big round of applause. Asante. So, ladies and gentlemen, we are now going to take a tea break, and it will be 15 minutes. If we can make it 14 minutes, we will appreciate. So the corridor is where the tea is available. Please, karibuni sana, and bon appetit.
sifiwa, wote ulimwenguni watu wote watambua, Tanzania yetu ndio nchi ya furaha. Naye Baba Nyerere ndiye wetu muhifadhi, naye ndiye aliyeleta na uhuru, Tanzania yetu ndio nchi ya furaha. Nyerere Baba.
Hello. 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 Moja mbili tatu. Hello. 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 Moja mbili tatu. Hello. 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 Hello.
Yes,
Hello.
1, 2.
Yes. Yes. Hello.
Yes, 1, 2. Yeah.
Hello.
Yes, 1, 2. Yeah.
Yeah. Yeah.
Very calm long form blues, saxoing, instrumental, minimal loop. Slow one over to Batacant, gentle dynamics, peaceful closing jerk, lasting 9-10 minutes.
May we be seated, please, so we can proceed? Can we be seated, please, so we can proceed? Thank you for sitting down. Thank you. Can we sit, please? Can we sit? All right. How is everyone feeling? Are we still feeling great? I believe we feel better now after having something to eat and drink. So we are going to get into the technical stuff in a few minutes. But before that, respecting our platinum sponsors that I'm going to call up next, can we all please be seated? Can we all please be seated? And as I said, we're going to have the technical stuff. We'll start with the issues about global exchange, trends, and product innovation. But before that, please help me welcome our platinum sponsors. And representing Caddo Securities, we have the privilege of having the CEO, Mr. Justin Amos with us. But before you come, please, sir, we have two announcements. This evening, after the order of events is done, after we're done with this event, we are going to have cocktails and networking at level 8. Now, level 8 is the top floor. Remember when I believe Mr. Peter was talking about the things that you can view today here in Dar es Salaam. He spoke of the beautiful lights of the Dar es Salaam nightlife, but you can view all of that at the level 8. So today from 6 in the evening, 6 o'clock in the evening, we'll have the cocktails at level 8. But also tomorrow, we are going to have a gala dinner, and the official attire is the African attire. I believe most of us already have that. If you do not have that, today, in between the end of the event and the cocktail hour, go and look for something like a kitenge or something that you can put on top to look like an African attire. So the exact timing of the gala dinner tomorrow will be communicated over the course of today or tomorrow in the morning event. So now, please help me welcome Mr. Justin Amos, the CEO of Kado Securities. Can we please give him a hand as he comes to tell us? These are our platinum sponsors, so please, a bigger round of applause to him, please. A bigger round of applause.
Unfortunately, Governor of Bank of Tanzania is not here, but chairpersons and chief executive officers of Stock Africa exchanges in Africa, leaders in regulatory authorities, development partners, distinguished guests of honors, ladies and gentlemen, good mornings. So it is a great honor to stand before you today on behalf of Kado Securities Company Limited, a proud platinum sponsor of this prestigious gathering. Allow me first to congratulate DSC on their 30 years anniversary. 30 years ago, the DSC began as a vision to mobilize domestic savings and channel them to productive areas. But today, DSC stands as among very reputable stock exchanges in Africa, and one among pillars that's contributed to national economic development. This achievement not only to the exchange alone, but also to the government of United Republic of Tanzania, the Capital Market Authority, the Bank of Tanzania, brokers, investors, CFEs, and every institution that contributed to the building confidence in our market. I also wish to express my sincere appreciation to Our Excellency Dr. Samia Suluhu Hassan, the President of United Republic of Tanzania, whose leadership has strengthened our economy, improved the investment climate, and enhanced confidence in Tanzania as an investment hub. Ladies and gentlemen, the themes of this conference, driving capital markets growth in Africa through innovation, integration, and inclusive participation, it is so relevant to Kado Securities. These three words are not conference themes to us, and I will tell you how Kado Securities is contributing to each of these pillars, and why we believe collaborating among African exchanges has been more important. First, inclusion. Africa's over 1.8 billion people. Most are young, most on mobile phone, smartphone specific, yet only 10 fractions actively participate in the capital market. Millions save money every year through formal or informal channels, but very few invest. This is perhaps our greatest opportunity to us. At Kado Securities, we believe our biggest competitors are not our other brokers. Our biggest competitors are financial inclusion, every citizen who have never invested, every entrepreneur who cannot access funds, every young professional who believe investing is for wealth. These are people we must bring into our market. That is why Kado Securities, we have a very ambitious target. First, among our target is to facilitate opening and activation of 1 million central depository system, CDS account, within the next 2 years. This is not business targets only. I always tell people this is a prophetic work. It is financial inclusion agenda. 1 million CDS account means 1 million Africans access to capital markets. It means 1 million citizens become shareholders of different companies. It means 1 million participants directly in economic growth. If every African broker adapt this similar ambition, imagine what our market will look like in the next 30 years. Second to these pillars is technology. Technology is no longer supporting financial markets. Technology has become the market itself. Today, investor expects to open account within a minute, from trade from their phone, receive market information instantly, move money seamlessly, access investment opportunity whenever they are. If we cannot meet these expectations, someone else will meet them. At Kado Securities, we are investing heavily in digital transformation. We are automating our investors onboarding, developing the integration investing platform, working with banks to simplify investment funding, building mobile solutions that remove unnecessary paperwork. Our objective is very simple: to make investment as easy as making mobile money transaction. Because when investment becomes simple, participation it grows. When liquidity improves, we believe our market will become stronger. Third to these pillars is regional integration. I've seen CEOs of exchanges in Africa that I've get a chance to visit, from Rwanda's, Kenya. Ladies and gentlemen, this room represents almost major capital market in Africa. Yet, despite the tremendous work done by ASEA, but our exchanges, you will agree with us, still operate within individuals' market. Imagine Africa where investors in Nairobi could effortlessly invest in Tanzania, where pension funds in Botswana could invest in listing in Tanzania, where retail investors in Lagos can invest in Rwanda within a minute, where African savings finance African business. That's Africa is very possible, but it requires collaborations, not competitions. No single exchange can unlock African full potential, we believe. Growth will come when our exchanges become connected, when our systems communicate, when our brokers collaborate, as we are doing, when our regulators continue building trust. Tanzania occupies a unique strategic position. Tanzania connects East and Southern African countries. We are increasingly become a regional logistic hub. At Kado Securities, we believe capital market can play the same role, connecting Southern African and East African countries. At Kado Securities, we are ready to support that vision. Ladies and gentlemen, allow me to propose to the distinguished CEOs of Africa Stock Exchanges gathered here today, these following agendas. Let us build a strong partnership between our exchanges as we are here today. Let us make easier for investors to invest capital across the African market. Let us jointly educate our citizens. Let us exchange market intelligence. Let us promote one another investment opportunity. Let us create a practical pathway that African investor can access African opportunity regardless of the national boundaries. At Kado Securities, we are ready to collaborate, whether through investment or education programs, cross-border brokerage partnership, joint investment forums, technological integration. Our doors are very open. We believe every exchange represented here has something valuable to offer to us. And together we can create something much larger than some of individual markets can do. Ladies and gentlemen, Africa does not suffer from shortage of capital. Africa suffers from fragmented capital. The savings, they exist. Opportunities are theirs. Our entrepreneurs are very smart, but the challenge is connecting them. That is the responsibility of all of us gathering here today. Government, regulators, stock exchanges, my fellow brokers, investment bankers, technological providers, together we can remove barriers that separate investors from investing in African opportunities. If we succeed, we will not only grow our exchanges alone. We will finance infrastructure, we will support entrepreneurs, we will create employment, we will strengthen pension systems, and accelerate economic development across our continent. Before I conclude, allow me to reaffirm Kado Securities' commitment. At Kado Securities, we are committed to innovation, we are committed to inclusion, and we are committed to regional collaboration. And we are committed to building long-term partnership within every exchange represented here today. To my fellow CEOs and leaders of stock exchanges, I extend an open invitation to you. Let us explore how Kado Securities can work closely to your market. Let us connect our investors from Tanzania to your market. Let us connect institutions. Let us connect Africa together. Because the future of African capital market, we believe, will not be built by individual country. It will be built by partnership. And as we're celebrating 30 years of Dar es Salaam Stock Exchange anniversary, let's mark this as a new beginning for African market. A chapter where African exchange work more closely than ever before, where African brokers collaborate instead of operating in isolation, where capital move from one border to another easily, and where African has opportunity to invest in its African future. Once again, congratulations to Dar es Salaam Stock Exchange, congratulations to ASEA for its continuing leadership, congratulations to every institution represented here for the role you play in shaping Africa's financial market. May the next 30 years of the African capital market be remembered as a period where Africa can truly integrate their market. Thank you very much. Asanteni sana.
Can we have another round of applause to Kado, please? Thank you very much for sponsorship, for your platinum sponsorship as well. And now further forward, we have another platinum sponsor today, and this is CRDB PLC, CRDB Bank PLC. Can we have a round of applause to them, please? And we have the privilege of having the head of capital market, Mr. Hamed Masumai. Can we give him a round of applause, please?
Good morning. Mr. Peter Nalitolela, CEO of Dar es Salaam Stock Exchange. Mr. Kiando Benedito, the CEO of CSDR, leaders and staff of DSC, and all invited guests present here, members of media, ladies and gentlemen. Good morning again. Assalamu alaikum. So I trust you all, you are doing well today. As I've introduced, my name is Hamed Masumai, and I'm heading capital market at CRB Bank. First of all, I'd like to thank God for granting us a good health to be here today. I also like to congratulate the DSC for organizing such a wonderful event. Before I proceed, I would like to just give you an overview of our CRB Bank PLC group. The CRB Bank Group is one of the largest banks in East Africa. We are among top 3 largest banks in East Africa, and in Tanzania, we are number 1. We are number 1 in terms of assets, we are number 1 in terms of profit, we are number 1 in terms of deposit, we are number 1 in terms of everything. And it's the only bank in Tanzania that's offering all services which are offered by capital markets. You have all the licenses. We have brokerage license, we have advisor license, custodial service license, and fund management license. So we are not calling ourselves a bank, we are called a group of financial services. So you cannot find it anywhere in your countries. It's the only CRDB bank. And the good story, our bank is also rated. Rated B1 stable by Moody's, this international credit rate. And in terms of our balance sheets, our balance sheet size is almost 24 trillion. 24 trillion is we are approaching almost 10 billion USD. Okay, and our share equity is over 3.1 trillions. Number of clients we have, we are controlling over 10% of Tanzania populations. Our number of clients we have is 7.2 customers. And our plan, I had a discussion with Mr. Mkama, and I told him very clearly that our plan is to ensure that at least 50% of our clients hold the CDS account. 50%. So our intention is at least within 2 years to make sure that at least our clients hold the CDS account. And we will start this year, financial years. We started today, and our plan is to make sure at least 25% of our clients has a CDS account, at least to assist the growth of our markets. In terms of our network, we have over 265 branches. Wakala agents, you have 36,000 wakalas, and you're highly digital with 98% of all transactions. Imagine you have all these branches in Wakala, but still 98% of our clients are still using our SIM banking and the other channels. In terms of offerings, as I mentioned earlier, that you are not only commercial banks, we're a group of financial services. A number of services we offer is including commercial bank services, insurance services, Islamic bank services, and the capital markets services. If you ask me why we are here today as a platinum sponsor in this event, first of all, our presence here at platinum sponsor is not by coincidence. We have been champion of the capital market and the DSA since its establishment. CRB Bank has been a key player in capital markets since its establishment in 1996, and they were the first bank to be listed in Dar es Salaam Stock Exchange, and the most active traded counter. Mr. Nalitolela related to this, that the most liquid counter at DSC is CRDB. And we are controlling over almost 40% of transactions happening in the quarter, last quarter, 2025. In terms of participations, as a CRDB, we participated over 90% of all IPO in Tanzania listed in Dar es Salaam Stock Exchange in different capacities. When you see the number of listed companies at Dar es Salaam Stock Exchange, CRDB was among of them to support the all issuances. And over 90% of all issuances were supported by CRDB. We also supported different companies in raising capital through DSC, enable investors to buy and sell shares via SIM banking, agent, and the branches. We started brokerage agencies with some brokers 15 years back. And last year we decided to establish our own brokerage firm. So now we can do brokerage businesses end to end. So in brokerage, we've been in the market for more than a decade. We also support government and the corporate company in finance solutions, facilitate over 8% of government security transactions. When you see the governor was here this morning, they were saying that in the last auctions, the number of participants and the number of amount raised was 1.3 trillions. And the amount which was taken it was around 100 billions. But 80% of all participants, they came through CRDB Bank. Makofi kidogo basi. And the bank has been active corporate issuer and able to issue corporate bonds under its USD 300 million M10 programs. Major transaction which we did, it was Kijan bond 2023, first green bond in Tanzania, first green bond, and it has never happened again. Samia infrastructure bond 2025, one of the largest and oversubscribed by over 200%. Al-Baraka Sukuk 2025, the first major Islamic corporate bonds. And we also supported 250 million USD equivalent of all Sukuk issued in our markets. Opportunity and market achievement in the last 3 years, we have seen equity turnover tripled in 2025 vis-a-vis 2024. And first 4 months of 2026 turnover exceeded full year turnover of 2025. Asset under management grew from 1 million $1 trillion USD to 1 billion USD to nearly 2 billion USD within a span of 1 year. And this happened because we've been doing these things in collaboration with the other fund managers, asset managers, to support them selling their units. So you can see almost 50 to 60% of all clients who buy units that come through CRDB. And we've been working very closely with some of the fund managers. So our commitment to market growth of DSC and our markets will continue to provide easy access to investors through digital channels and the branches. So we'll still continue to allow our investors to use our channels to do the investments. As not only CRDB shares, you can buy any. When you come to us, we'll give you a room to buy any shares listed in the Islam Exchange. And the good thing, we also allow to buy any stocks within our SADC and the East Africa countries. We have a good arrangement with different investment banking within East Africa and the SADC countries. So if you want to buy any kind of any type of equity, you can just come to RDB and they'll help you to cross borders. We also like to assure that we will continue to support companies, government institutions to list on DSA. So expect more of issuance to come through CRDB. We have started this year. For the only Q1 and Q2, we helped 2 corporate companies to issue bonds, and both of them were oversubscribed. So we'll continue to drive innovation in financial products, so expect more products to be created. We will still work very closely with DSC to identify opportunities. We will also continue to create local and international investment opportunities. We will also continue to develop a new investment fund. What we are saying, we are not competing with anyone. We are just wanting to supplement the markets. So as a CRDB, we have still a room to work in collaboration with other asset managers to ensure that we are coming with a new types of funds which are not existing in our markets. So expect a lot of things to come very soon. We'll continue to increase public awareness of capital markets. We've been doing a webinar every week on Friday. So we welcome all of you to listen to our webinar. We have people who we can share a lot of information happening within our markets, not only in Tanzania, even in the other markets. And we've been doing this webinar in collaboration with the other investment bank. We had one with KCB last week. We tried to analyze what is happening in the other markets. And I'm sure 100% when you attend our webinar, you'll be able to learn a lot of things which are happening within the East and SADC countries. In conclusions, I would like to assure you that CRB Bank has deep commitment to increase its impact in the capital markets. The bank is focused in expanding its impact in automation of capital market services, advisory, bringing new products to the market, and the providing of sophisticated and reliable research. The bank is also exploring on options of transfer all capital markets activities to a subsidiary. So our plan is to form a full-fledged subsidiary very soon. We know we have only licenses, and still we are operating under PLC, but our plan is to form a subsidiary, and our plan is this thing to come by maybe early Q1 next year. So CRB will continue to work with the financial institutions and the companies, both local and international, to grow capital markets, support the DSE growth, and continue to support the government initiative aimed to strengthening our economy. Thank you very much. And asanteni kwa kunisikiliza.
All right. So you wake up with a chance and a choice. Everyone had a chance of being a platinum sponsor. The choice is yours, how you're going to use that privilege of being the platinum sponsor. Can we have another round of applause to CRDB, please? All right, now, among the things that the WFE is trying to make sure we head to is testing the 24/7 extended trading hours, but not just testing it, making sure it's efficient. I believe as traders, as CFEs, as authorities, we would love to see that come into fruition. And the next presentation is going to talk about, I believe, that and much more. It's a technical presentation on global exchange trends and product innovations. And to tell us about that, we have the privilege of having, and please help me welcome, William Bill Speth, who's the advisor to the CEO and senior advisor on WFE membership. Can we have a big round of applause, please, to Mr. Bill Speth? Welcome, sir.
Thank you all, and thank you to the conference sponsors, ASEA, and especially the Dar es Salaam Stock Exchange. Congratulations on 30 years. I'd like to begin. I've spent a career more than almost 45 years now in the financial markets, and a big part of that was in product development at the Chicago Board Options Exchange. One of the things that I really came away with was that innovation is really about identifying frictions and breaking through barriers, fostering strategic partnerships, understanding how capital flows, and most importantly, how you can influence those flows into your market. And what I was hoping to talk about today was to share with you kind of an international perspective on what international investors are looking for and how they view the market. I can assure you that the eyes of the investing world are on Africa right now. And there is pent-up demand, and all they're waiting for are the vehicles and the liquidity and the infrastructure to start to invest. And the purpose of the talk today is to show you what we're looking for, or what the investing world, primarily in the US and in Europe, are looking for. And this will promote capital flows into Africa. Okay. So this is just the agenda. It's a fairly technical presentation. So what I'd like to do is I'd like to kind of go through the presentation rather quickly. I will make the presentation available for anyone who wants it, so just let me know. I'll share that with the Dar es Salaam Stock Exchange, and they can get it to you, or you can ask me directly. So the idea here is that there's an innovation. So the probably one of the greatest innovations in the last 50 years is how the world of the creation of exchange-traded funds and the kind of the nexus of the index world and the exchange-traded fund world kind of has grown. I don't have to go through a lot of this because I'm sure you know what an index is and you know what an exchange-traded fund is. But the idea here is the index becomes the blueprint for a very cheap, transparent, and manageable investment. And the ETF follows the rules that the index creates and becomes the delivery vehicle for that investment. As you see, the first published index was the Dow Jones the Railroad Index in 1884, and that was quickly followed 2 years later by the Dow Industrial Average. The S&P 500 came in around 1923, and the first index fund was the Vanguard Mutual Fund in 1976. The idea there was that Vanguard had a really important idea that large diversified investments in covering broad sections of the market could be packaged together in a fund structure and delivered cheaply and transparently through the fund vehicle, and that which later became the ETF vehicle. What is the advantage of the liquidity conversion that takes place with an ETF? What's really important is that, and this is particularly important for Africa and other emerging and frontier markets. Without an ETF, it's very difficult for international investors to take a holding, to buy shares, buy investments in, say, Africa or any other developed market or developing market. They'd have to, if they did this, they'd have to open accounts locally with a broker. They'd have to convert the FX exposure manually. They'd have to settle on local cycles, and they'd have to manage custody across multiple stocks individually. They'd also have to know enough about which stocks to buy. With an ETF, all that's been taken care of. None of that friction exists because the ETF structure itself collects all the stocks. They collect all of the they deal with all of that. They deal with all of that complication and friction, and they absorb the cost, and for that they charge a fee. The great thing about the ETF market is that ETFs have really democratized access to any number of investments. Today, in the US anyway, you can buy ETFs there are thousands of ETFs covering multiple exposures, and all you have to do, you don't need any kind of special bank account, you don't need any kind of special type of account or taxation structure. You can just go in, buy a ticker, an ETF ticker just like a stock, and you own that diversified exposure in that you want. Now, retail investors find this invaluable. Institutional investors, they look to this kind of liquidity. What they will do with an ETF, rather than go into the market, a lot of institutions are capable of going through the motions of opening all these accounts in foreign countries and having relationships with multiple brokers. But what they find very efficient is that they can, on a moment's notice, their investment committee can say, I want exposure to Africa, or I want exposure to South Africa or Kenya or Tanzania. And they can go in and they can find an ETF ticker that satisfies those criteria. They can buy it quickly, there's liquidity, and they can hold it until they have an opportunity maybe to roll out of that exposure and buy individual stocks. The other thing that's important, and this is more recent, is that ETFs tend to give everyone quick, transparent, and very outstanding exposure to new asset classes, such as commodity and currency, thematic and ESG indexes. Crypto is becoming a very popular ETF in the US and in Europe. What's new is that this whole idea of custom and direct indexing, and you can go to some brokers in the US and Europe and you say, I want to have this particular exposure, and they will go and they will model that out and build a custom index for you, and they will then go place the investments in your brokerage account that track that index. But at this point, that's a small part of the market, but it is a growing trend because there are all sorts of advantages. There are tax advantages to this as well. So the question is, why are these index funds so popular? And what this table shows is that it's very hard for an active manager to outperform a benchmark. And one of the reasons is, and a large part of the reason, especially over time, so if you go out 15 years of performance, only 10% on average of active managers outperform their benchmark. And one of the reasons is that after fees and taxes, that really creates a drag on portfolio returns. So it's even if the best managers will tend to underperform their benchmark just because of fees and taxes. And what happens is that with ETFs and anything that's index linked, anything that it really tracks a particular benchmark, there are fewer decisions. The index provider gives you all the information you need on a daily basis of what you need to invest in. Okay, so, and for that, since indexes are so cheap to create and there's no judgment at the investment level, the management fees for these funds tend to be very, very low. Anywhere from 3 to 10 times less. So in some cases you've had, and what's happened is, and the remarkable thing, in 50 years, the pairing of indexes and ETFs, and I also include indexed assets, has shifted an estimated $12 trillion US from active management into this passive management. And in the US anyway, there's been a debate about whether the tail is wagging the dog, so to speak. That is passive investing really driving performance in the US stock market. Oops, sorry. What makes ETFs so popular, in addition to the low cost and the transparency, is that the creation and redemption process itself really it sticks to the price discipline. It ensures that the net asset value of the ETF or the fund will always be linked to the actual price that I can transact. So the price you see in the market is always very close to the net asset value of the fund or the ETF. And the redemption and creation process is kind of a back office system that works. And what happens is, rather than me as an individual having to go out and assemble all of these stocks and then post them to the ETF, and they give me shares in exchange, this is done by professionals. So professionals are actually assembling the baskets to do the creations. They're the ones, and these are called APs or associated parties. And they assemble a basket of securities. They exchange the basket for shares. The shares trade on exchange. And then the arbitrage, because they are able to buy and sell, they're in the business of buying and selling these individual stocks. And so what happens is, if the ETF kind of trades, there's demand and it trades at a premium, the AP will come in and sell those shares and then buy the underlying basket. If there's a discount, they'll do the opposite. They'll buy the underlying basket and they'll sell they'll do a redemption of the shares. So these are the players in the ETF market. These are the ones that are the important players globally. MSCI, FTSE Russell, S&P, Bloomberg, they're the ones who actually develop the rules. The ETF issuers, the big ones are BlackRock, Vanguard, State Street. The authorized participants, I mean, these are global players especially, I'm sure they're familiar to you, Goldman Sachs, Citadel, and Jane Street. And they're the ones that actually do the redemption and creation. The market makers you can bring in market makers from outside. Many of the market makers that are in the US have global operations, so it's very likely that that like a popular Susquehanna or Citadel or IMC, they're a global operation. So, and I'm sure you've got brokers and market makers on your own individual markets as well that can, quote tight bid-ask spreads on the exchange. That's their job, and they get paid for it. They buy at the bid, they sell at the offer. The exchanges themselves have a real important role to play because they are the listing exchange, or they list the ETFs, they enforce the rules, then they really kind of provide the price discovery. And what I'm talking about here is it's not necessarily the exchanges in the local market. These are the exchanges where the ETF itself is listed, and I'll go through like how the local market interacts with the other ETFs. And then the end investors. So why do indexes matter? I mean, it is a massive, right now there is almost $22 trillion of assets tied to ETFs, which represents about 20% of the total invested AUM, index-based AUM. So total index, the managers, institutions that are following indexes and making investments following index rules is about $100 trillion. 22% of that is all in ETFs. And that's a growing segment of the market. And it will continue to grow as there's more retail participation and there's more opportunities to buy. In the US, I can tell you, I spoke with a small cap growth manager or small cap value manager who deals in international stocks. And he says that he is convinced that at the very least in the US, retail investors are always looking for the next big thing. And in my opinion, probably in the next 5-10 years, Africa is going to be that next big thing, and you're going to have tremendous US and European retail flow into African ETFs and African stocks. 59% of the global ETF assets are kind of managed by 3 of the top issuers. This 18 trillion, 18, 28, and 68, they add up to more than 100. But what that is that's all indexed assets, and it doesn't really adjust for double counting in some cases. An interesting fact is that right now there are more indexes out there, published indexes, than individual stocks. WFE estimates that there's 58,000 stocks listed worldwide. There are millions, literally millions of indexes calculated globally. And one of the reasons for that is that a single market can be sliced and diced into 50, 100, 200 indexes, depending on different combinations, market cap, sector style, factor, ESG, and currency hedged. So on these things, there are multiple ways of casting these indexes because some manager, some institutional manager, or some ETF provider thinks this is something that will sell to their clients. the important players in the index world, and this is really, I think, what I'd like to focus on for just to kind of make everyone aware of. That MSCI and FTSE Russell are really the two big indexers for foreign markets. And so, and in each of these foreign markets, in foreign and developing markets, they have different tiers. And each year or periodically, they'll go through they will keep track of what's going on in each of the markets, and they will decide what tier each country or region belongs in. And that ability, or that ranking, that tiering, dictates how investors kind of interact with those markets. So in MSCI, they got frontier, emerging, and developed. In FTSE, they kind of split. They have the same basic tiers, but they split the emerging into secondary and advanced. What's important is that what determines the tier placement in both FTSE Russell and MSCI is market accessibility. So they look to, are there foreign ownership rules? Are there limits on foreign ownership? Capital repatriation. Is it easy to register? They look at market infrastructure, which is a very important part of this. They look at settlement, custody. Is there central clearing? Is there stock lending? Now that doesn't, like if you don't have one of these, that's not the end of the world, because you probably, if anyone had all of these, they would be in either an emerging a high level, high tier within the index provider space. What you'll see is that, okay, so just looking at FTSE, this gives you an idea here, that you can see market and regulatory environment is required for all of the tiers. If you don't have a proper market and regulatory environment, then this is something that it will exclude you from one of these indexes, or from the FTSE index. The other things they look for is DVP settlement. Okay, this is really, really important because the participants need to know that they have certainty of ownership and they have certainty of payment. So, and the other thing is, how do the markets deal with failed trades? Are there failed trades? Are there costs of failed trades? Because if there are high costs of failed trades, or if there are many failed trades, then the experience with these, it is deemed to be a risky market to invest in. There's nothing that says that these institutions can't invest, but the reason you go with an index is because you've got a third party that's respected looking at these factors, and they're making these determinations for you. So they're essentially blessing the trade. And that's important if you're kind of in it, because if you deal with investment committees on your board, these are things that they will look at. These are the kind of like MSCI criteria. It's roughly the same. One of the things I just wanted to point out is that the information flow. So I know that everyone speaks English here, and I think most of the material that I've read in the African market, you can find it in English. But for individual companies, the disclosures, investors prefer that the disclosures are in English. And so the other thing that's really important is that openness to foreign ownership, and any kind of foreign ownership caps is something that makes it really difficult for a institutional investor to enter into your market, because a lot of these people, if they have a mandate, say they for example they have an African mandate and they have to invest $10 billion. Well, there has to be $10 billion of securities that at least $10 billion of securities that they can invest in. So, foreign ownership caps, it's going to make them if they can't get the scale that they want, they will probably not, will look elsewhere for that. An interesting thing about we talk about these changing the market infrastructure and making market reforms. What the index providers have done recently is they survey institutional clients, and what they'll look at is, even though you've got, you can say to the world that you have all of these things and you tick all of these boxes, but if the people who actually use the markets don't really concur with that view, then that's something that goes into the thinking of MSCI and FTSE. So in MSCI, they do an annual review, and they survey they survey the investors, and the reforms must be verified by the investors before they will put their seal of approval on a particular market. As I mentioned before, size matters. These, international investors, especially institutional investors, really like to invest in scale. Once they make a decision, they do all the research, they want to be able to come in and invest at scale because they want it to be a meaningful investment. If there's not enough capacity in the market, there are some of the things that can be done. There can be issuances of state-owned enterprises, some incorporation of pension funds, corporate governance reform, and kind of incentives on mid-cap companies to grow, enter the market, and to grow. Let's see. Where this is important is because not all of this is in the control of the exchange. And one of the things that has to be a concerted effort that includes the central bank, the exchange, Ministry of Finance, all of the really key stakeholders that are involved in the in dealing with capital markets within a particular country. When you're reclassified, so say in these two cases in Vietnam and Greece, FTSE reclassified, they bumped up a tier. And what happened particularly the poster child for like making your market accessible to international investors is really Vietnam. Once they were included into a FTSE index, their local index grew 47%, and right now the World Bank expects that they're going to get $25 billion in inflows by 2030. So how do ETFs attract capital? The ETF itself is 5 minutes? Okay, all right. Sorry about that. Okay, I went a little bit long. Okay, the important thing here, so mechanical buying and selling. The reason you want to be in an index is because once you're in an index and a manager tracks you, then they have to buy, So when Vietnam was added to the FTSE index, all the managers who tracked the FTSE Russell Vietnam index, they had to buy. So this is the important thing. Where you list determines who can buy. Most ETFs that give foreign exposure are in the United States and Europe. Very few start out on the local market. And an old saw, I'm sure you've all heard this, liquidity begets liquidity. The thing is that when the liquidity cycle breaks, that really causes the market to pull back and divest from a region. So you want to make sure that the ability to kind of track the NAV with the redemption creation process is maintained. These are the things that institutional or international allocators look for. AUM track record, as AUM is important, liquidity is important. We'll skip that. Okay, the Africa opportunity. Right now, I heard 1.8 billion, but the idea, there's a lot of people in Africa, most of them being very young. There are 54 nations with stock exchanges. They have total dedicated ETF assets are 1.3 billion, which represents a very small portion of the global ETF assets. These are the countries that have U.S. exposure in ETFs or MSCI exposure. Okay. The Vietnam case study, they did three basic things. They removed the requirement for pre-funding. Pre-funding really makes the redemption creation process very complicated and very costly. So by removing the pre-funding, it made life a lot easier for the redemption creation. In Vietnam, they banned foreign ownership limits, and then they replaced their current system, with the KRX system, which kind of enables T+2 settlement and lays the groundwork for a CCP, which will promote short selling. And you can see when they were added to the index, you had that familiar bump in capital. As a practical sequence, if you want to follow kind of the way the index providers think, you fix your infrastructure first, or you modify your infrastructure. You pursue the index inclusion. You court a major issuer directly. So it's not that they're going to find you. You have to go and you have to demonstrate to them that you have all the things they're looking for. Initially target a U.S. or some kind of a European listing. The idea here is that you can also kind of rely on local funding sources. So the International Finance Corporation or the African Development Bank could potentially be a seed investor in these ETFs, which helps them kind of get an initial bump in liquidity and promotes more trading. Where Africa really there's a big advantage is that and this was the gentleman before me mentioned this, is that 600 million folks in Africa are mobile money users, and I think that there's more mobile money users than bank accounts. These are the kind of things, this and the 800 billion in annual remittance flows to emerging markets. What's happening here is that this is something that's going to ultimately challenge, could challenge or be absorbed into the brokerage community. This could provide Africa with a real opportunity to kind of change the landscape for how investors access their products. The road ahead, this is, like I was saying, I mentioned there are some active ETFs now. Direct indexing is a thing. There's a growing number of ESG and impact indexes. And then tokenized, funds that hold tokenized securities. These are something that is kind of growing as well. So the key takeaways here, I'll let you read them and I'll kind of yield the floor. Because I'm sure I went over my time, did I? Sorry. But anyway, I want to thank you. It's been a pleasure speaking with you today, and I'll be available for the next 3 days, and if would love to discuss this with you at length. So, okay.
Another round of applause to Mr. Bill, please. As he said, if we have more time, maybe tomorrow, maybe we'll give him another opportunity. But for today, I think that's that. And because we have a lot of other things that are coming up. Now, initially, we were to have a panel discussion on the state of African capital market. But there's a technical presentation that also involves Africans. And we would love for the panelists in the panel discussion to also give a hint on these alternative financing about the presentation that we're going to have next. So we'll have the technical presentation first, And then afterwards, we'll have the panel discussion. And because the panel discussion will also have a thing or two about this topic at hand. And so the technical presentation is on unlocking alternative financing through Sukuk. And we'll use the case study of Tanzania. And this will be provided by the executive chairman of Yusra Sukuk Company Limited, Sheikh Mohammed Isa, and he'll be doing it virtually. So can we please have a round of applause to Sheikh Mohammed Isa? I believe he's already with us. Yes, he is. So Sheikh Mohammed, I believe you can hear us. If you can hear us, can you please say hi? Your microphone is still muted, Sheikh. I think it's supposed to be down here on the left. Down on the left, yes. Tecnologia. Yes. We can hear you, Sheikh. Can you please say hi?
Hi.
All right. So another round of applause. Now he can hear us. Can we have a round of applause to Sheikh Mohammed Isa? Welcome, Sheikh. We can hear you now.
In progress.
Hi, welcome. Welcome, sir. You can start, Sheikh Mohammed. You have...
okay, good afternoon.
Yes, you have 15 to 20 minutes. So please, welcome.
Okay. Good afternoon, everybody, ladies and gentlemen. We are in front of us with a topic, unlocking alternative financing through Sukuk, a case study of Tanzania. I've been given 18 minutes. My name is, as it appears there on the screen. So without any further ado, we just touch on the introduction to alternative finance, then the African needs for alternative finance, and the Sukuk, a case study of Tanzania, and then we will finalize with a call to governments and regulators. As an introduction, alternative finance has been explained by United Nations Development Program as non-traditional ways to finance and to deliver development outcomes from private or public sources. The new financial mechanisms and technologies, which include crowdfunding, social and development impact bonds. So the capital market has been mentioned there on the development impact bonds, and equity-based investments in social good projects. These approaches are being used to access financing in an inclusive way, which can contribute to the achievement of sustainable development goals. And this is how UNDP explains about alternative finance. The World Bank also speaks about capital markets acting as an engine for alternative finance by providing structures for raising capital outside of traditional bank loans. And by utilizing such mechanisms, like public and private placements, the venture capital, the digital platforms, the capital markets instruments allow entities, whether public or private, in need of financing to directly access investors. So you directly access investors, and it is across the globe, enabling diversified risk mechanisms and long-term economic growth. So this is how the World Bank puts the capital market as an engine of alternative finance. So when we are talking about alternative finance for financing Africa, unlocking the potential, we have to benchmark on the capital markets. So here it shows the resilience of African economies across 2026 with a GDP growth of 4.3%, and various countries are in various GDP potentials, although that this one is always being shown up with the fastest growing economies in Africa. You know, the 10, number one, as you can see, is Ethiopia, but looking on the GDP growth forecast for 2026, it shows very strangely Southern Sudan being the first, and then with 22.4%. And so this is across Africa. But looking also on the rising interest rates and inflationary cost of domestic borrowing across Africa, the situation is not good. That's why we have to look on the alternative finance. You can see how countries are ranked there across the African continent. And Tanzania is standing at the inflation of 4%, and all other countries, as you can see, across Africa. But there is stagflation happening in Africa. And what is stagflation? That's when there is inflation which is not going according to the GDP growth. The GDP growth is huge, yes, but there is inflation. The GDP goes down because of the total impact of the inflation. Unemployment goes up and demand of commodities goes down, and then inflation goes up. So this is a phenomenon happening across Africa. And the result is, you can see, is the debt service per GDP in Africa in total. The top most are there, Angola being the top, but the bottom also are to the right, whereby you can find Algeria being with the lowest GDP, debt to GDP ratio of 0.1%. So how debt finance development turned into a debt trap for Africa? Africa, before, following 2008 financial crisis, it borrowed very heavily, and then suddenly US Treasury raised interest rates, and the African debt servicing increased dramatically. Following COVID-19 effects, many African countries were affected, and to the extent of Zambia and Ghana defaulting in their debt servicing payments. So the debt trap remains one of the major African challenges, of which unlocking alternative finance is the only solution to African debt trap. How can we overturn the debt trap? Number one is to control the debt, from increasing. Stop debt from increasing. This is number one. Number two is budget controls. African countries to control their budgets more than increasing the expenditure. And then number three is what we are talking about, turning into alternative finance. And therefore, how we can use, for example, Sukuk issuance, before we can go into Tanzanian study, using Sukuk to finance African development, the issuance mechanism of using special purpose vehicle and the accounting mechanism makes this instrument off-balance sheet financing, and we all know what off-balancing financing is. It doesn't increase the debt to income, or if it is a nation, doesn't increase debt to GDP ratio of a nation. And issuance modalities you can issue in lease-based Sukuk, in equity financing, in agency financing, and at last you use the fixed asset sale or what we call the sale financing. So using this mode of financing as alternative finance can ease African pressure on the GDP in payment of the debt. Now, the case study of Tanzania, Tanzania has been developing very fast in the alternative finance, and the reason is the government of Tanzania acts very correctly in 2021 when the Ministry of Finance and Planning initiated what is called Alternative Project Financing, APF. Within its capital markets were benchmarked a lot. There are green bonds, there are Sukuk, there are blue bonds, the infrastructure bond, there is socially responsible bonds. All of them were put as alternative project financing instruments, And then we saw the birth of the Tanga Uwasa. And then after, in 2021, we saw the birth of Sukuk issuance in Tanzania. So the development of issuance of Sukuk in Tanzania has been, as you can see here, in 2021, after the alternative project financing policy was out, we saw a microfinance called Imani Finance beginning with its debut Sukuk, corporate Sukuk. It was 3.5 billion Tanzanian shillings, and then which is equal to about 2.03 million US dollar. Small it is, but very huge in alternative finance. Then more Sukuk came in 2022 with Iman Finance coming in, KCB Sahel Banking issued their first debut Sukuk, Amana Bank issued their Sukuk, and then the total worth of all these Sukuk in 2022 was 16.12 million US dollars, and the country moved forward in 2023. We saw an increase of up to 23.82 million, with Imani Finance also taking role, shining again. A microfinance doing wonders using capital markets. And in 2024, something remarkable happened at the Capital Markets and Securities and Authority in Tanzania. The first SRI Sukuk came through Premier Sukuk by a secondary school in Bagamoyo, who looking for 1.2 billion to build a hospital for the school, ended up with 1.924 billion Tanzanian shillings, which is 851,273 US dollar. Although small, but this was one of the flagship of the capital market authorities in Tanzania. And Demand Finance had a record that year, up to US dollar 32.6 million, making that year very good for issuance of Sukuk in Tanzania. The total was 33.43 million. In 2025, we saw the first quasi-sovereign Sukuk in sub-Saharan Africa by the government of Zanzibar, which was a total of 446 million US dollar, but the first tranche brought in it brought in 165.23 million US dollar, with converted I-Trust from Imani Finance coming in, CRDB also Sukuk coming in. That year we saw a growth up to 171.11 million US dollar of Sukuk issued in Tanzania. In 2026, the year we are in, more financial institutional Sukuk came in. KCB Sahel brought in their second Sukuk, which was ended with 11.55 million US dollar. And then I-Trust came in also with another. We hope by the end of the year, we will also do good. So this is the line of Tanzanian Sukuk development from 2021 to 2026. The total so far, which has been raised using capital market Sukuk instruments, is 259.99, we can say 260 million US dollar, most of them being corporate Sukuk, with only a quasi-sovereign Zanzibar government Sukuk coming in. This is a chart showing what we are talking about, okay, for year 21. You see the growth was going up. We hope in 2026, maybe we can go up. So long as Zanzibar tranche 2 comes in, it will push over and maybe reach the same year 2025. The same graph, and here is conducive legal and regulatory framework is the backbone of what has happened in Tanzania. First of all, we have alternative finance policy in Tanzania, as I showed you, 2021, and then we have Islamic Financial Act we don't have in Tanzania, but we have Islamic banking regulation at the central bank. Thanks to the governor, he was very, very proactive. Last year, we had these regulations weighted from 2005. Then Islamic insurance framework at the TIRA, Tanzania Insurance Regulatory, they are in place with TIRA guidelines 2022. And also we have primary market, Islamic capital market framework at our Capital Market and Securities Authority in place. In secondary market, we don't have listing and trading rules, and of which now I hope the CEO is listening to me, and we have already found a way with the UNECA, United Nations Economic Commission for Africa, to have them. And for sovereign Sukuk issuance framework, we have a draft, 2 drafts, sovereign, quasi-sovereign, and GRE Sukuk guidelines 2022, and SRI Sukuk guidelines 2023. We hope that the Minister of Finance will approve them and then we have that framework, very, very important. The challenging, to finish my presentation, the challenging we are facing in Tanzania in Sukuk issuances is the assets. It's very difficult, you know, you need, the Sukuk are assets backed. You need to have an encumbered tangible asset to back up the Sukuk. And this has been a stumbling block for many corporates which want, because most of their tangible assets are already encumbered by the loans they took from banks. So the CMSA has been very, very strong in making sure the asset is to be at this SPV before the Sukuk has been issued. Now the globe is going into asset-backed Sukuk. If you don't have asset to back up your Sukuk, it will be very difficult to issue a Sukuk. The second challenge is taxation. Because of the tax are not clear about the assets being used for Sukuk. The movement of assets from originator to the SPV will bring in taxation matters. And also the SPV itself, how is it taxed? They are very prone to tax. And we hope that the TRA will also take into account this matter. We have also knowledge gaps, you know, the population and even most of our corporates and our public institutions, they don't have enough capital market knowledge. But our regulators, the Dar es Salaam Stock Exchange and the Capital Market Authority are doing good, and we hope that they will continue doing good to make that the knowledge is reaching the public. Sharia compliance also is a matter because we don't have already a collective investment scheme legal regulatory framework at our authority. The halal funds and Islamic real estate trust do not have guidelines. We hope that CMA will take this matter seriously. Another challenge is sovereign. For sovereign, we have not approved the sovereign, quasi-sovereign, GRA and LGA Sukuk frameworks. They are not yet approved. This is a challenge. Zanzibar Sukuk was issued without having a sovereign or quasi-sovereign framework in place. Another is the financial technology, the fintech. We are lacking a trading platform at our exchange, which will be Sharia compliant. And we, at the Yusra Sukuk Company Limited, we get problems until the DSE assisted us to act as a loan in making sure we can trade the Sharia compliant. But at the platform, we don't have, at the DSE platform. And the last is the kafil insurance also has been a problem because according to Capital Market Authority, any Sukuk has to be guaranteed either by a bank or by insurance company. Now, our takaful companies are demanding demands which are not very much good for issuance of Sukuk. We hope also they will lax their demand to make sure that their takaful cover are good offered for takaful. The last but not least is finance for non-finance. Most of the non-financial institutions are not tapping into capital markets. They are still benchmarking on the banks. They are not going into capital markets because of lack of knowledge or so on. We are not seeing contractors, we are not seeing importers, we are not seeing transporters benchmarking into capital markets, and this has been a trend. We hope that with the more knowledge being provided, they can come in as well to unlock the capital markets. Our call to governments and financials, to finish my presentation, first of all, the governments and financial regulators have to believe that alternative finance is a key to unlocking capital across Africa. Secondly, they should have political will, regulatory will, institutional will, in order to make sure that alternative finance can thrive in Africa. Otherwise, it will remain in books only. And then we need pragmatism, that the value of alternative finance based on practical consequences across Africa. There should be a practical believing and putting into practice profession and personal experience in order to experience the real value of alternative finance for Africa. Regulatory framework, making sure there are conducive legal and regulatory framework across Africa. We call on the government, the Ministry of Finance, regulators, to make sure that we have across the ecosystem, the banking, the capital markets, the insurance, the taxation authorities, that we have legal and regulatory framework which are firm for alternative finance. And lastly, capacity building. We call upon African governments, upon regulators, upon secondary market and primary market to make sure that we are, giving more capacity building, more knowledge to to the public, how they can open their CDS accounts, how they can have, selling or buying of capital market instruments. In this way, we can be stimulating the alternative finance use in Africa using the capital markets. For this, I can say thank you so much for giving us this opportunity, although it is a few minutes, but I think we have added value to this ASEA conference in Dar es Salaam. Thank you so much for listening to me. Hello, Dar es Salaam, back to you.
All right, can we have another round of applause to Sheikh?
Hello?
Yes, we are thanking you very much, Sheikh Mohammed Isa, not just for the powerful presentation, but also for adhering to our time limits. Thank you very much. Shukran. Can we have another bigger round of applause? Thank you very much, sir.
Thank you, sir. Thank you.
All right. As I said earlier, we can see there are some of the issues that we will, I believe, include in the panel discussion as well, especially the challenges that he said the Sukuk is facing here in Africa. So if you hear the year 2004, what do you remember? 2004. Leaving aside your age, of course. All right. So Facebook was launched in 2004, right? Do we remember the state of trading in 2004? It was mainly institutions, right? For those that were there in 2004. A lot of Gen Zs in here. So the next man that I'm going to call up, who's going to be the moderator of the panel discussion on State of African Capital Market, knows exactly how it was in 2004, because he's been working with the Nairobi Securities Exchange since that year. So that is more than 2 decades now, 22 years at the Nairobi Security Exchange, 7 of those years as the COO. Please welcome Mr. David Wainaina. He will have the opportunity of calling his panelists as well. Welcome, sir.
Thank you very much, MC. I think that introduction gives me the ticket to put an extra pair of eyes. I thank you. So allow me to write on the protocols that were established this morning. And because we are in Tanzania, I will say it in Kiswahili as well. Itifaki zote zitaendelea kuheshimika. Shukuru sana. So after 2 great presentations, as they set up the stage for the microphones, we do have great leaders within our exchanges who will come here on stage and make sense to the 2 great presentations that we have received. One had an international perspective, and we were very happy, William, to hear the potential of our ETF product. And the question I was putting out to myself is, as exchanges, we are aware that we have in excess of 16 of us. How many of us have an ETF strategy within our exchanges? Probably the CEOs will come here and guide us further. So allow me to invite our host, the CEO of Dar es Salaam Stock Exchange, to come on stage. Thank you very much, my friend Peter. The second person I'm going to call on stage is actually a lady, the CEO of Ghana Stock Exchange. Thank you very much. She's going on stage. I also do have my friend Jude from the Nigeria Exchange Group, the CEO. Please welcome on stage. And last but not least, we do have the CEO of Namibia Securities Exchange. Please join us on stage, Tian. Great. We don't have so much time, so allow me to join them.
I'm told we do have 20 minutes, but I'm also aware we have regulators, so extension of panel hours is also possible. I will start with you, Peter, as our host, and first, congratulations as you get to 31. So having heard the presentations, we have just heard from an international front. We have also heard around the alternative investment opportunities. In your view, what is the state of our African markets in your own view?
Thank you, David. So in my view, we are at a point where just about to really take off. And I say this knowing that we have exchanges that are different stages in terms of the numbers of years of existence, the maturity in terms of the product, liquidity, and depth of the market. We have some of the exchanges, we have representatives not from Burundi, but we have some representatives from Burundi. One of our most recent exchanges, we have Ethiopia in the house. Still quite a few years since they started, but moving on fast. But generally, and of course we have the big brothers, JSC, who have been here for much longer, and they control the lion's share of the market cap here. But when I say that we are at the point of taking off, if I look at the continent in entirety, the first thing is technological innovation, borrowing from the mobile revolution in Africa and what that has meant for financial inclusion, and looking at the fact that we have a continent whereby 60%, or roughly about 1 billion of the population of the continent is below the age of 25, combining the age of those investors, the 60% of the population of the continent, combined with the fact that mobile access has become much more cheaper and accessible, it provides a greater access that maybe previous generations didn't necessarily have. The interlinkages that we're building both from the technical front, and it was touched upon a bit earlier, and Linda's going to come later on talk about ALP. But before we go to the actual being able to link technologically, but at least the conversations that we're having in different fora such like this makes it easy for us to share knowledge. Last month we were actually in Addis, and one of the discussion points was that new exchanges don't have to start from scratch. They can leverage from what others have done. So combining all of this, I see us at a point of taking off, and the drag that we previously had, whereby, for example, if you look at the DSC, we are 30 years old, but a lot of what we're seeing right now has happened over the last 5 to 10 years, I would say. It gives me the feeling and the confidence that in the next 5 to 10 years, we're going to see a lot faster progress and development in our markets across the continent. When Bill was presenting, he was talking about the opportunities that are available in Africa that you can tap into. And some of those, some of the exchanges sitting in here have already started discussions. They've already started developing some of those products. And combine that with new emerging technologies like blockchain and tokenization, etc. I see us creating products that would have in the past taking us a whole lot longer to get into. We're accessing a lot of new investors that will grow up knowing what capital markets are. It's not something that they have to start towards the twilight of their existence here. And last but not least, we're also getting to a point where we're developing products that speak to our needs as a continent. The last presentation from Sheisa was talking about Sukuk, and while that is not necessarily an African invention, but around the region we've found a way to leverage what Sukuk financing has to offer and invite a new class of investors. And one of the things that Sheisa usually likes saying is we've opened up doors to the east in terms of financing, which gives me confidence, like I said, that we'll be taking off in terms of bringing new products to the market, accessing more and more investors, using technology to democratize the investment in capital markets, and leveraging on what you've learned from each other and what you've learned from the past to deliver products that are specific and relevant to our market.
Great. You have painted a very, very good picture. Abina, if I may turn to you, and first we must congratulate you. I think under your leadership, you are able to end a 7-year drought in terms of listing. Is it the same? Do you agree with Peter, who has painted a very good picture around our markets in Africa? Abina.
Thank you very much, David. And on behalf of all of us at the Ghana Stock Exchange, we extend sincere congratulations to Peter and the entire DSE team on your 30th anniversary and hosting us so brilliantly here in beautiful, beautiful Dar es Salaam. We are taking off. I love that, and I want to share where the state of the Ghana market is with all of you today. In Ghana, we run two main markets, the equities market and the debt capital markets. As at yesterday, as at the end of June, our equities market composite index is up 68%, or about, in local currency term, or about 60% in US dollar terms. This was much lower compared to the same period last year. Our market cap, as at the end of June, is about 25 billion US dollars, up 67% year to date. Our volume traded, or our value traded, sorry, is up to 320% on the same period, over the same period last year, so far this year, to 3.9 billion Ghana cedis. And interestingly, the number of transactions, the number of executed trades in the 6 months so far this year is up almost 600% over the same period last year to 590,000 plus individual transactions. This is the state of our equities market. And to cap all of that, we have seen 3 IPOs in 6 months, breaking a 7-year drought of IPOs. This is the state of Ghana's equity markets. On the debt market, the story is the same. Volume traded is up 100%, about the same period last year. Number of securities on the market has gone up to about 33 billion US dollars, combining securities on our market to about 58 billion US dollars. The market is strong. The market is growing. What we are seeing is that there isn't a lack of capital. What we have today on our market is a lack of supply, the supply side. And for us, we think the supply side can grow largely through policy, the regulators, the work that we have to do with the regulators to unlock even more access to capital by our private sector, by our government institutions, and give the African investors opportunities to invest successfully. So we are on the up, and there's more work for all of us to do. Thank you.
So let me just chime in to you before I get to my friend Jude. So we do have the various exchanges here who want to learn from our experiences. I know Ghana has gone through cycles, and it's good to note that currently in 2026, Ghana has been rated the second performing exchange after that very, very difficult. I think that requires a round of applause.
Please do.
So if I may put it to you, what's the magic for the benefit of the other exchanges, Abina?
A few years ago in 2022, we were in Abidjan, and everyone was looking at me. What went wrong in Ghana? We defaulted, government of Ghana defaulted on its debt, both domestic and international debt. It was a real tough time for us in Ghana, but it also presented a number of opportunities to reset the economy, to engage capital markets, to have capital markets influence some of the decisions that were taken. So some of the key things that have been done have resulted in macroeconomic stability. The exchange, we've engaged policymakers unendingly in this whole process around some of the things we want to see for stronger capital markets. It's led to a slew of new rules and new ideas and initiatives. Some of the key things include working with our investment banks to launch investor market apps that enables anyone to access the market. It's led to policy initiatives around more listings on the market, including SOEs. The president of Ghana was at the London Stock Exchange a few weeks ago, and he announced that X number of SOEs are coming to the market, and we are working to implement that. We are working actively with the central bank, the governor of the central bank. We meet monthly on getting the remaining banks to list on the GSE. So all of this is bringing a lot of confidence, and as at the GSE, we spend more time in boardrooms of the private sector companies, of the family-owned businesses. And we are very proud to say that one of our largest family-owned businesses, we just listed them on the exchange in an IPO that was 4 times oversubscribed just 3 weeks ago. So these are important things we are doing, introducing new rules, introducing things that make access to the market much easier. Thank you.
Market access much easier, and that's the presentation that came in here from William, who was giving us an international perspective. Jude, if I may turn to you. You know, Nigeria represents one of the largest economies by investor base. So I know this year you have made super bold steps around your settlement infrastructure. And again, here in the morning, we heard that market infrastructure, post-trading issues around DVP are super important even as we repurpose our market. So based on that experience, what will be your experiences, and what do you want to share with these executives and capital markets players as we all think around the best fit for our post-trade strategies, Jude?
All right, thank you, and good afternoon, distinguished ladies and gentlemen. Let me also lend my voice to congratulate E for their 30th anniversary. And I was particularly pleased by the Sukuk experience, $259 million from that instrument is really commendable, given the fact that our exchange is over 66 years old, and we've been able to raise $1.2 billion utilizing the Sukuk market to finance developments in the country. Perhaps a good place to start is just to give an overview of the exchange, just like Ghana has done. In terms of all-share index, we're up about 47% for the half year. We traded $3.4 billion in terms of secondary market trading on the equity side. Our market cap on the equity side is $106 billion. On the fixed income side is $40 billion. We have an ETF 12, which is second largest in Africa, and is $40 million. We trade an average daily value now of 29 million, and we have 322 listed securities, because we're really a multi-asset exchange. So on the equity side, we have 146 listed companies. Now, on the issue of post-trade settlement and inclusion to the index, obviously the index is really important for any market because of the liquidity coming from international. But what we have seen is that domestic liquidity is equally very important, because liquidity begets liquidity, so it's very important that the domestic liquidity has a strong base. We are particularly fortunate in Nigeria. We have a contributory pension scheme that has about $16 billion from the investor base on the institutional side, and that has really helped. Of the $3.4 billion we've traded on the equity side year to date, over 88% of that was done by domestic institutions and retail investors in our market. We have 2.6 million retail investors active that currently trade our market. So to settlement, right, we've moved from T+2 and more recently to T+1. And the whole idea really is we have to recognize that exchange as a platform is not necessarily competing with itself. It's more or less competing with other platforms that are selling other investment vehicles. And these platforms trade and settle almost on the 24/7 cycle. So migrating to a T+1 really helps to reduce the risk. Our market in particular does not have room for failed trades because there's a guaranteed fund available to ensure that trades do not fail on the equity side of our business. And it's very important because we're talking about the African market in general to commit the work ASEA is doing and the leadership of Celestine and the way he's driven the market integration. I know ASEA will talk about what they have done, but it's really important that the African markets that we're talking about today is completely different from what it was 10 years ago where we were all working in silos. Today, we are all here. It's not just Nigeria or Ghana or Uganda. It's an African market. And it's very key to understand the work that is being done because that will really help governments to raise capital across Africa. It will also help corporates to raise capital across Africa and not just necessarily in a silo, country specific. So the African market has grown. Today, we must also commend World Federation of Exchanges and Nadine coming in because she feels the need because from the presentation we've heard, Africa is really the next frontier. And it's very important to understand what is going on, who is doing what, and she has been very helpful. I want to thank her. She attends to matters pertaining to African capital market development and growth because Africa really needs its capital market to be functional, to be able to finance all the various gaps that we have seen. For instance, we talk about climate impact, right? The African Development Bank says we need $277 billion annually to address the impact. I mean, the last couple of days it's been raining in West Africa, and we are beginning to see the impact everywhere has been flooded, and the funding that is available is somewhere around $40 billion. So the gap, something that can be bridged by utilizing the capital market. In our market, we have a green bond that is about $67 million. So it's always a good conversation when we're not talking about Africa. Africa is no longer, in terms of the capital market, where it was, and it will continue to evolve because of the willingness to work together to address all the regulatory framework, the integration that will allow corporates and investors utilize the capital market and the post-trade trading format. We continue to evolve to ensure that we meet international best practices or standards, and at the same time allow the local markets to function within the framework that would allow local liquidity to grow significantly above the international.
Fantastic, Jude. If I may turn to the Namibia Securities Exchange, first of all, super job on your ETF space. I think when I heard the international presentation here around the potential of ETFs, I turned to the Namibia Securities Exchange. I think you have in excess of 10 ETFs, which means you're facing the right direction. So please, would you paint us a picture of the state of African market, of course, with Namibia as a case, and also please chime in as to how, as exchanges, we can be able to take advantage of the ETF, which has been positioned here as a super product for the future for exchanges too. If we can get him up, Mike.
There we go. Thank you very much. Yeah, the ETF principle is certainly a great way to try to increase liquidity in our markets and to increase the buy side. I want to use two examples here of where I think we are failing as Africa to really broaden the reach of our offerings. Angola last year had one of their first IPOs of a national bank. We had our conference there, we spoke to the brokers, we spoke to the issuers, and suggested to them that as soon as the information becomes available for the IPO, that they send it out to all the African exchanges so that we can try to create a wider net for them to be successful. What happened was their immediate take-up locally was enough for the subscription, so they didn't send it out to anyone else. Now, that's fine and well for the issuer. He was able to successfully list. But what happens is your secondary market falls flat because you had the opportunity to get everybody interested in it, and you didn't bother to do it because you met the immediate goal. And we all do this. It's problematic. So we increase our domestic markets, but we don't create an international market. I'm going to give you another example. So Dangote is currently in process of listing in Nigeria. He said he wanted a pan-African listing. But have we offered him something to make it easy to list in all of our countries? No, we haven't, because we're competing with each other. Each wants to have his own listing fee, his own annual fee, and everything else. So he's not going to do it. He might end up doing it in a couple of the biggest markets, but that's not going to develop the smaller markets. So we are doing this to ourselves. We're shooting ourselves in the foot because we want to have all of something, instead of being able to share a little bit of something. So unless we create a commercially viable product to actually make our companies available in the region, we're definitely never going to get them to be available internationally. Now, I understand we have currency and cross-border trading and all kinds of issues. We've done interconnection, which hasn't led to anything. So we need to start really looking at what the solution is. For ETFs like Bill was presenting, I've spoken to issuers that are looking at doing a pan-African ETF, where they take the highest liquidity stocks from all the major markets, putting them together to make them available to a dollarized and a euro market. I think that's a very good initiative, and that should lead to a bigger pickup. But if you look at our PE ratios of our issuers on our equities, they're low for a reason, because we've created local markets that support local issuances, and as soon as we look at an international market, there's nothing there. And that's on us. And I do think there's commercial solutions to that, but we're not doing that. We're focusing on hardware and interconnection, and that's not the solution.
Do you think it's time, if I may just follow up, because I guess you have provided a solution here. Do you think it's time for an African ETF as a product?
Definitely, but we need to create the commercial system within our markets for us to actually make that work. So not just interconnection on a technical level, but on a commercial level. So if you have the Dangotes of the world, that they're able to list in all of our markets at the same time at a once-off price, that there's a revenue share at the back end of, instead of having companies running to go and list in each country individually. And that's going to create liquidity on the underlying, and then an ETF can also run on that.
Absolutely. I think ASEA has their homework done. What you're proposing here strategically is that we need a Pan-African ETF. The mechanics around it, we are going to agree. So that should be one of the action items arising from these very, very market cap based exchanges here. I can tell you here I have in excess of 50 billion USD in terms of market cap. If I may turn to you, Abina. So AI is a big theme in our markets. In fact, we understand and we appreciate from the data points we have that AI is going to reshape how we do business. What's your view around this theme from an innovation perspective, Abina?
Thank you very much. I think it's no longer whether it will shape what we are doing. It's just the new way of doing things now. So the adoption of these new technologies today is important. And on our markets, we're already seeing the private sector put some of these in the products they are developing. And at the exchange for us at GSE, we are busy at the moment fashioning out our own digital strategy. And one of the key areas we are looking at is how we use AI to enhance the trading experience, the market oversight and surveillance experience, the issuer engagement experience, and of course the financial literacy experience as well. So these are key pillars for us in terms of how we modernize our exchange. But for us, one of the big pillars is that our key financial sector regulators, the Securities and Exchange Commission and the Bank of Ghana, the central bank, have come up with a virtual assets bill or act for the whole market that guides digital exchanges, tokenization, etc. And the sandbox is also live for testing new products and ideas, including the use of AI in trading, in investor education as well. So these are all new areas that have been launched in Ghana, and even as the exchange, we are looking at what our strategy is towards some of these digital assets and new technologies. It's the way of work, and who knows, 5 years' time we'll sit here and maybe our exchanges as we know it may have evolved into something else.
Fantastic. To your point, AI is not a choice. I know in the room we do have our technology partners. So strategically also we want to call upon the management of institutions that when you are repurposing market infrastructures, AI should not be a choice, so that when every market is operating on AI, then Africa is going to adopt it. Judy, if I may come to you, because we are very happy around the bold steps that you have taken in Nigeria, especially around the post-trade settlement. What's your view around the virtual assets and how they can, of course, enhance our operational efficiencies around the settlement and cross-border trading, Jude?
All right, thank you. I think it's very important to just point out that in the past we had knowledge gap, and that was really an impediment to innovation across our capital market. But in the last couple of years, in Nigeria in particular, we're quite fortunate to have a DG who is responsible for the Securities and Exchange Commission that is really very knowledgeable about the market. So it's very important, and he has really done a lot of innovative things around the whole virtual assets. Obviously, like in Ghana, in Nigeria, we have our new ASEA Act 2025 that he really championed, and in that whole document, all the whole framework for digital assets are well captured. And one of the things he's doing with his team is really to have like a sandbox where these virtual asset providers can really be monitored end to end. Obviously, we're aware that for a regular exchange, you have your trading platform, you have your CSD, but for virtual asset, it's really not the case because you're going to be using blockchain technology. So it's end-to-end encapsulated type of offering. And so the sandbox gives them an opportunity from a regulatory perspective to understand what the offer is and how investors can actually be protected. Because we do find some rogue platform providers, especially in the whole crypto fiasco that has gone down. So it's very important for regulators to be able to have a firm grasp of that, because investor protection is really critical, especially for Africa, where you're encouraging investors to participate in the market. So I said before, we have 2.6 billion active retail investors. And now this is a country that has over 237 million people, and 70% or more because the average age is 18, so 70% or more, like we saw, will be in that 25-year bracket. Why is it that we don't have a lot of investors in the market? So investor education is key, product innovation is also key. But I think that largely digital assets are good in themselves. They have liquidity challenges, just like the regular exchanges will also have liquidity challenges to be solved for. But I think by and large, the regulatory framework for administering these assets in Nigeria in particular is well coded. So it's easier for test case for providers to be able to use it. What I do see is that the Gen Zs, who are obviously the bulk of the population, tend to gravitate towards assets that offer ridiculous sort of return. They're not really comfortable with the traditional asset classes that are giving you 20% or 50% return. And that is understandable because they watch their parents walk over the years and they see there's still always a delta between what resources that are available to what expenses that they have to make. So in order, because obviously they are smarter, in order to close that gap, they're looking for investment returns that can really help. And I think digital assets, tokenization are things that can offer such ridiculous type of return. Obviously, it's driven by demand, and there are quite a lot of them. So you can see the demand being able to drive the volatility within that space. So by and large, the right regulatory framework, which is really coming from the understanding of the regulator, knowing essentially how to control that space to ensure that investors are well protected, and investor education. And obviously you start with hard assets that can be tokenized, and over time you can allow other virtual assets that do not really have the feats that you could say qualify for a proper capital market instrument.
Directly to you, Jude, again, do you think it's time for ASEA to issue a stablecoin within our region?
Well, I have the president of ASEA here, and I must commend his leadership because, first, you need to have the right people to drive innovation. And it's very important to also point out that innovation in itself is not really what will drive our capital markets in Africa, because we're at a low base, right? So in order to bring these new innovations, there has to be first that framework that first of all integrates the traditional understanding of capital formation and how capital markets work. And so when we get to that point where issuers can raise capital across Africa, where investors can invest in real traditional assets across Africa and grow their wealth. I mean, Ghana is up 68%, Nigeria is up 47%. So there's really no excuse as an African why you can't invest in any market within Africa. So I think that level of comfort needs to be arrived at so that the regulatory frameworks around investor protection, which is really critical, can then allow us to go into other exotic things, which I believe will ultimately happen, but we need to first familiarize ourselves with the traditional integration of real assets to avoid a situation where people coming into a market that they don't really understand, that is not well regulated and get burnt. It's going to be harder to bring them back to the market. I mean, we suffered something similar in Nigeria during the financial crisis. We had over 6 million investors that were investing in the market at the time. A lot of people were investing without proper understanding of how capital markets instruments work, because then I was a trader, and somebody will come to you and say, I have this amount of money, can you give me 1,000% return? Because everything was going up. There was a lot of hype, herd mentality. But when the market crashed and people really lost money, it was an eye-opener. So people were selling their houses to buy shares, thinking that once you've bought the shares, it's going to be 1,000% return. And people lost significant amount of their fortune. And that generation will tell you anything that has to do with the capital market, equities, cut me out, because they are seeing a side of the market that they were not familiar with. So it's very important, investor education, investor protection, moving from the known, understanding the market before we can then about the exotic, innovative areas of the market, which we will do within a controlled regulatory framework in place.
Great. Chai, we have 1.5 million people in Africa. Only under 1% of those are accessing our markets from an investment perspective. In fact, statistics show that this is a very young economy. We have potential investors of between 20 and 35, of which in excess of 1 billion are not coming to our market. So in your view, what is one thing that we must do to ensure that we broaden that accessibility in our markets, also through the exchanges, in your view? I think you need an ETF.
Thanks. The fact is the mobile revolution has created an opportunity where our young people are directly digitally connected already. So by us giving them the opportunity to trade on mobile platforms would certainly be number one. The easiest way to do that is to have stuff like retail bond issuances, where people can access it quickly and hopefully trade it with enough liquidity, and then any other products following on from there. So once you have that app on the phone and somebody started using it and he understands it and he starts seeing how returns work, then it creates a whole new access point. We still have a large portion of the population that is unbanked. So if you require banking, then you've already set up another hurdle in terms of giving people access. So all these new technologies are ideal platforms for us to leapfrog some of the historic processes that the rest of the world has had to follow, and then trying to give people access quickly. However, we have certain hurdles in that as well. We have very stringent KYC processes that other parts of the world don't necessarily have. The Americans put us on gray lists because we don't have beneficial ownership disclosure, but they don't apply it themselves. So we've become rule takers for international requirements that actually make it more difficult for us to do these things while those markets themselves don't do it. So again, cooperation and having a united front in terms of giving accessibility to our people in a convenient and easy way, while still taking care of the necessary regulatory steps and covering all the bases. But on blockchain, all that information is public and it's clear. So we should not be the ones to make it more difficult for people to actually get access, while sometimes we are actually the gatekeepers.
Thank you very much. I want to give each one of us just 1 minute for your parting shot, and then we will end this, starting with our host, Peter. 1 minute parting shot, Peter.
Okay, thank you. So, starting with the first question that you asked, I really do believe I see us as a continent at the verge of taking off. My one ask is that we have to have regulatory harmonization, first of all, within a jurisdiction. So the Capital Markets Authority has to be speaking the same language as the central bank, same language as the tax authority, revenue authority, and the exchange. We do find from time to time that we hinder our market growth because there's a bit of regulatory disfragmentation and uncertainty sometimes in terms of what, if there's an exemption in a particular instrument in terms of withholding tax, is it always going to be there? So regulatory harmonization within a jurisdiction and then across regional blocks and eventually across the continent for us to approach the world as one market.
Good. Sabina?
Thank you. There's money in Africa. What we lack is ability to transfer that money across our borders very easily. So how easy is it to move funds from Ghana into Joburg or into Namibia? And that is why, for me, the regulators are the key to unlocking what we are looking for. If my pension fund can't move funds easily into Kenya to buy securities, we are not integrating the markets. So there's a reason why $24 billion left Nigeria into crypto assets last year. 10 billion left Ghana into the same crypto assets. Outside of India is the biggest crypto market in the world, followed by Nigeria. Africa collectively are the third after that. And that is billions and billions of dollars every year moving out into these assets. And yet try to buy MTN South Africa shares and you'll go through plenty hoops and loops. And so for me, it's not even just about AELP. It's the conversations we have with our central banks, with our ministers of finance, led by our capital market commissioners, to say, how do we sit and make sure that this works? The talking has gone on for a bit, so action time. Thank you.
Very good. Regulation, and in the room, Jude.
I completely agree. I think the regulators have the capital market can really be to catalyze. Perhaps the IT guys think I'm going to be radical in my conclusion. I think the regulators have a big role to play in harmonizing rules to ensure that corporates, irrespective of geography, can raise money from the capital market. Because Africa really needs to begin to utilize the capital market to fund the gaps that they see from taxes or revenues that are getting. I mean, they have all these minerals that are not processed. It's not part of their balance sheet. The cost of doing business is ridiculously high. We can go into all the various shenanigans around currency devaluation that occurs on a constant basis around purchasing power parity. But the truth is, the capital market should be utilized by Africans, irrespective of geography, for the development of Africa. And they should do this by harmonizing the rules away from the trading platform which AELP provides, the currency, I mean 54 countries, different currencies. It becomes really hard to harmonize without the regulation driving that. So the central bank must be a critical partner to the formation and development of the capital market. It shouldn't be a silo type of conversation, because having a common currency will really help cross-border listings, cross-border trading, and the ability for corporates and governments to be able to raise capital to catalyze growth. In Nigeria, the government has aspiration of a $1 trillion economy, and I believe that they are working seriously towards utilizing the capital market to fund that aspiration, just like we have seen raising over 1.2 billion from Sukuk, which they have used to refurbish the roads across the country. Green bonds, $67 million have been raised to address all the various issues around desertification and renewable energy and transportation. But I believe that more can be done by allowing capital formation to be singularly addressed within the African continent. And I think that's really the way to go. Technology in itself is good. And from an NGS perspective, technology is at the heart of our strategy. What we have seen that does is to bring in more people. You're able to onboard a lot of people utilizing technology, but without the adequate products and the support for those products, it becomes one of those conversations that, yes, people are there, but do you have capacity? Do you have liquidity? But that liquidity can be addressed when the ability to raise capital, not just from a single geography, is done in a seamless manner. Thank you.
Good. Finally, the CEO, Namibia.
The infrastructure requirement, funding-wise, is immense in Africa. Everybody has a role to play in terms of how that'll get funded, from us helping our issuers create and package the product sufficiently, to creating that market cross-border and not just trying to do things domestically. But throwing that net out is not only in Africa, that's also internationally. And we need to have the right platforms to actually present the opportunities to sufficient markets outside of Africa. And there's a couple of conferences where you can go, where you can present these things. I don't think any of them particularly work well for real funding raises. And that's probably where the opportunity lies in terms of getting the information out there to a wide enough audience, timeously, so that you can actually have international participation. We can keep running around our domestic markets, but we need to grow the pie to make it work.
Fantastic. Ladies and gentlemen, I think the message is clear. We need to look at Africa as an asset class. And because the president of ASEA is here, the next time we are meeting, we need a Pan-African product. For starters, we should have an African index that is going to transpose to an African ETF. And if there is no market that may want to list it, I can confirm that Nairobi, we are ready to receive such a product. So thank you very much. Have yourselves a good afternoon. I thank you.
Can we have a bigger round of applause to the moderator? And as they take their picture, can we have another big round of applause, please, to the panelists as well? I must admit that the moderator did a very, very wonderful job. He was standing between, he was sitting between us and lunch. And since people are still smiling, I believe that was a job well done. Can we have another round of applause to the moderator and the panelists, please? All right, so up next, we are going for lunch. We were supposed to be back here at 1:55, which is more or less 20 minutes from now. But I don't know, since we have a lot more coming up, I believe that we will use this 30 minutes for lunch. I'll just like to give a few announcements. So as I said earlier, this evening from 6:30, we'll have a cocktail and networking session, which will have entertainment as well. The session will take place at level 8. It's a wonderful event. Please don't plan to miss it. As the name suggests, level 8 is just the 8th floor of the same building. So level 8 will have the cocktails. You don't have to go to change. You can just take your tie off and just go upstairs. Tomorrow we'll have the gala dinner, which will start at 7 p.m. So you have ample time to go and get ready. The gala dinner will take place at the Marquee Hall at this same hotel, the Hyatt Regency. The Marquee Hall, which is just outside there. I believe we'll have people to direct us to the Marquee Hall as well. Today, lunch will just be where we had breakfast and the health break. So we'll just go outside there, we'll take our lunch, and then we'll be directed to a place where we can sit for lunch. So instead of having the hour that we were supposed to have, I believe we can have 45 minutes. Those who say yes, can you say yes? 45 minutes. Can you say yes? Okay, with 40. All right, so we're going to have 40 minutes, and that means at 5 minutes past 2, I think. Or 10 minutes. 10 minutes plus past 2. We'll be back here so that 5 minutes later, we'll start with the next session. When we get back here, we have some technical presentations, and then we'll proceed. So please, Mr. Nalitolela, can you please help us in guiding the high table to go first to have lunch? And then everyone else, we can please stand up. Make sure you don't use this time for networking. We'll have ample time for networking during the cocktail hour. Thank you very much. Enjoy your lunch. 2:10, we're back here.